We'll see you around the timeline. Feels good to be back.
I think that Rollup is one of the most premier media brands in crypto, and Andy and Robbie are great experts at everything they talk about, and it's my favorite podcast.
Adding it to my library as we speak.
Potentially multi-chain deployments.
We are at DevConnect Day 1 here. I'm with Jesse from Base. JP Morgan, BlackRock, DTCC, Fidelity, the entire thing was just institutions. It's next level. This industry is going to the next level. And guys, I don't know what else to say. I'm bullish.
He said it, he finally said it.
I'm so bullish.
Andy's bullish, I'm bullish, we're bullish. Is headed to the top. If we're not already at the top, we're going to the top.
We're going.
Rollup is my favorite.
From all walks of life, all over the world, all over this industry, come together for the Rollup.
headed to the top. If we're not already at the top, we're going to the top.
We're going.
Rollup is my favorite.
From all walks of life, all over the world, all over this industry, come together for the roll-up.
Zoom out. The institutions aren't coming. They're simply here. It's the golden age of crypto, guys. Get right. Let's go. Welcome to the nest. See you on the show.
It's August 6th. Welcome to the roll-up. It is basically hurricaning outside of my window. They don't call it the Miami Hurricanes for nothing. Guys, today's August 6th. It is the roll-up. I'm stoked. I'm absolutely psyched. We're pre-rich, pre-bull, and you are listening to the roll-up. We got our guy, Atan, back on the sounds today. Guys, hit me up in the chat. Freedom guys here, bright and early. And, man, if you just keep patient, if you just hold the line, boy, oh boy, is this cycle going to be promising. It is absolutely sensational out here today, and we are in the final moments of potentially getting a vote on the Clarity Act. That is the news. That is what everyone wants to hear about, guys. Tell me, do you think it's going to go through? Do you think it's not going to go through? I want to hear about everything that you guys want to talk about. We've got plenty to cover for today. We're going to get into the markets. It feels like the macro is shifting. The landscape turned headwinds into tailwinds, and we're going to be talking about it here today. Bitcoin turned on the line. Bitcoin looks fantastic. And you guys know that we are rocking with Bitcoin, ETH, Hyperliquid, Lighter, Zcash. That is what we are talking about day in and day out here on the show. I encourage you not to get too zoomed in. I know we go live every single day, but boy, if you just look at those weekly and those monthlies, oh man, it is just a matter of time. Just a matter of time, guys. Fantastic show. As always, shout out to Plume. Couldn't do it without Plume. They are sponsoring the Tokenization Tower. We've got a host of people in the Tokenization Tower today. The team decided to pick it up and take it over to the nest, to the tower for today's show. So big shout out. Give me a couple air horns. Give me some noises. Give me some sounds. I'm glad that I'm broadcasting here from South Florida. We've got our team in the office in New York. We're going to get into today's show. Fantastic show for you guys today. Markets and weather, as always. Like I said, there are palm trees like shaking in the wind as a result of how much storm we have going on out here. Almost hurricane season in Florida. And then we're going to get into Clarity Day with Haseeb from Dragonfly. We've got Olivia from Ava Labs, head of tokenization there, one of the smartest tokenization minds in the space. We've got Jesse from Base, and we've got the head of legal from Chainlink. And last but certainly not least, man, we've got the guy, our friend of the show, Santiago, is going to be joining the show. Fantastic show for you guys today. Honestly, couldn't ask for a better lineup today. And we've already got Freedom Guy with W's in the chat, so he knows exactly what's going on. And we made a little note in our post-production call that we're going to lower the noise of the swoosh on the ads today. So we're going to make sure that you guys are tuned in and locked in for today's show. Before we get a little bit further in today's show, over to the news segment, we're going to tell you about our open, stable, borderless, and genius-compatible money, Frax. Frax is one of the leaders in stable coins. They're doing big dog things. They've got big dog energy. And man, I'm bullish on Frax and what they have coming out of the DeFi space. I just tend to think they're one of the few coins, one of the few stable coins that is considered money. They're not one of these hedge fund, backed stable coins that are generating interest. These guys are actually getting the monetary premium. I think it's going to serve them extremely well in coming generations. Like I said, the weather here is rough. 88 degrees. Is that rain? Is that what I hear something in the background. I think that's rain or static or storm or something. Feels like 102 and it's hurricaning outside. Relay is the hurricane in the markets. They will take you anywhere you need to go cross chain. They also rolled out just today that I believe they're not doing any fees on stablecoin transfers. So they do stablecoin to stablecoin, pretty much pegged to $1. They don't charge any fees. You don't get 98 cents on $1 transfer. You get $1 for $1. That is what's happening on relay.com. One of the few cross-chain exchanges to do this. So they're doing things the right way over there at Relay. Also, want to give a big shout out to our partner on the tokenized equities front. You guys know them well. We had a good session with Gabe yesterday, and Denari is doing incredible things in the tokenized equities world. They were able to take a much broader approach than we had previously seen in the tokenized equities world. Also, Gabe says that there's some tremendous partnerships, and there are things that you can now do with your stocks, like collateralize, like use them as margin. I just think this is what is going to unlock a massive re-rating in DeFi protocols. Obviously, the tokenization companies are poised to do quite well. Dinar is a private company. They don't have a token, but if they did, I think it would do quite well. And then this is enabling a lot of volume and TVL increase across the DeFi ecosystem, a lot more user activity. We just unlocked an entirely new asset class. These things are minted on demand, and they represent real shares. You get all the same shareholder rights, no SPV nonsense. So that's Denari. Fantastic project, doing tremendous things, and the markets are just brewing. Powered by Zama, as always. I mean, things are shifting in the macro climate. The guy behind the sound effects is short, but that's why he's on the sound effects. Bitcoin just turned green right there. All you got to do, someone's getting carried out. Hope it's not our sound effects guy, Mr. Atan. You're going to catch him on the streets. Powered by Zama, as always. Zama is doing fantastic as well. Saw a good tweet earlier today that was talking about Hyperliquid and how it is correlated to the equities market and AI stocks. Also think it's correlated to the NASDAQ. The AI equities, and you'll hear in our daily equity segment for today, there's a little bit of discorrelation or decorrelation happening. It seems as if the hyperscalers are kind of returning to their position as leaders of the market. And then DRAM, semis, chips, all of these are still really feeling the weight of the liquidation cascade. They got way, like, I don't want to say overvalued, but their multiples expanded quite a bit. Those feel like they're coming back to reality. And so you're kind of getting this more mature, segmented approach in the equities market. Ultimately, you guys have been hearing us talk a lot more about equities on the show because there's a lot more volatility in the equities market as it pertains to the digital assets. I mean, I'll just tell you about the approach that I've been taking, which is just steadily building positions. I'm not going to tell you, I mean, you guys know what I'm in. I'm in Bitcoin, ETH, Hype, Ladder, Near, and Zcash, more Zcash. So that is what I'm taking a position in, but I'm not rushing to go all in. I'm just steadily building positions because we don't know how long apathy is going to last. But this is the thing. You never get a long time to sell tops, but you do get a long time to buy bottoms. That's the way that this thing goes. We already saw the big, capitulation wipeout that happened that took us below 60. Now this is just foundation building all along the low 60s. We might get one washout. People think it's all over, but ultimately I think you're going to look back a year, 2 years, 3 years from now, and you're going to love building positions at these prices. I know I will. And that's what's happening. Like I said, equities, it's a mixed setup. S&P's up, NASDAQ's down, hyperscalers are up, semis are down. Oil went up. Feels as if this is driving a lot of the macro changes. We heard how, and I think we're going to cover this actually in the show today. So I'm not going to do too much on that. And then 10-year and 30-year are climbing. And so that is what we're seeing in the traditional markets and the macro markets. Before we get into the news for today, I'm going to tell you about the AI company that I'm watching, which happens to have a token. It's Near. and we're big fans of Near on this show. They have Iron Claw. Also, if you're worried about potentially the equities market fracturing and you're thinking about the rotation from AI into crypto, this is a great way to express bullish sentiment on exactly that, because you can position yourself. If the AI trade decelerates but the crypto trade accelerates, then you're positioning yourself quite nicely at the convergence of these two themes. We believe Hyperliquid, Near, Zcash are the three-headed dragon that we're betting on here at the Rollup. First piece of news here for today is from our boy Bitcoin Jack. If you assume AI will exploit the essence out of infrastructure, then you want to be long decentralized exchanges and privacy coins. So if you're long AI, you should get exposure to this basket too. So obviously, we've seen what kind of havoc AI can wreak. I do agree with the privacy coin sentiment here, and because you have these exploits, you have this potential, threat of vulnerability as a result of these models. I do think these models can be used for good, but there's plenty of people that are using them for evil as well. They're trying to hack a lot of these protocols. I also saw another tweet just from a cybersecurity perspective. If you have any public keys just floating out there in the abyss on GitHub or just, out there on your clipboard, it's a good time to just wipe all of that, because there is going to be a model that is just going to be set loose, and it's just going to say, hey, if you can encounter any of these things in the wild, suck as much money as you can from these wallets. You don't want to be caught in that sort of debacle. Bitcoin Jack does talk about this, also talks about how decentralized exchanges could be the solution. But then obviously the self-custody thing of last week and Cold Card is still getting worked out. So I don't necessarily agree with the decentralized exchange angle on this, but I do agree privacy coins from Bitcoin Jack is a great way to express bullishness on the anti-AI hacking every piece of infrastructure narrative. Zcash is how we're expressing that thesis. We are big believers in Zcash. We saw when Zcash traded 7 Bitcoin for 1 Zcash back in 2017 when it launched on Poloniex. I thought it was absolutely ridiculous. I still think Zcash is not worth 7 Bitcoins. That would put 1 Zcash at the price of $42,000. Excuse me, $420,000. Think we've got a long way to go there. People are calling for $10,000 Zcash. Still think we got a long way to go there, but it feels like Zcash to 1,000 is pretty much written in the stars. This is a great way if you're worried about AI taking over the world, where you want to take control of your money. You want to make sure that it's shielded, confidential, and make sure that you're prepared for a quantum future. Zcash is a fantastic way of doing just that. I'm long Zcash. Not going to say financial advice as far as what you should do, but I am long Zcash. Next up, our friends over at Plume have joined the DTCC, Digital Asset Solution Industry Working Group. Give it up for Plume. I mean, give me some sounds. These guys are doing fantastic. We know that the DTCC has the if it's a sandbox environment, testing environment, this thing is going to come out into the real world and start getting used in October. And so this is this just happens to align with the 1 year cycle. 4 year cycle. But the 1 year from the peak that happened on 10/10. There is one thesis that says a lot of people are going to front run that 10/10, front run that October 1 year cycle reset. But regardless, DTCC goes live with their digital asset solution in October. As far as what they've announced, they've organized a working group of several industry leaders, Alpaca, Plume, Charles Schwab, NASDAQ. I mean, the list goes on and on and on about the projects that are in this group, and Plume now joins, and they're in great company. Plume says, we look forward to contributing to this initiative and leveraging our expertise in compliance standards to the work the Digital Asset Solution Industry Working Group is doing. And I think that's exactly what this working group is organized for. They are looking at all of these companies that have done great work in the digital asset space and they're looking to establish best practices before they just jump in head first. They're looking to learn from the best, and Plume is certainly that. Freedom Guy says he's a big fan of all the sponsors of the show, which is rare. Completely agree. Couldn't do it without our partners here on the show. Big shout out Plume, Near, Relay, Aligned, 1inch. Just fantastic group of partners. Sensational indeed. And so couldn't do it without all of you guys. And like I said, DTCC is bringing their tokenization infrastructure into the limelight. They are responsible for more than $114 trillion in assets. Absolutely massive in size. And now Plume is positioned right alongside the DTCC as part of this working group. They also highlight that the Kimber Transfer Agency is an SEC registered transfer agent for official ownership records. And this is, I believe, the transfer agency that Plume acquired. And so now they've got quite a bit of technology and regulatory infrastructure at their disposal to garner some really, really, really capital efficient digital assets infrastructure and work together with the DTCC to make sure that consumers get the best technology, the most protected, and the most access to financial instruments. If you want access to financial instruments and you don't want to move the coins directly out of your wallet, but you still want to contribute to some of these liquidity pools, you might have heard of this concept of shared liquidity. 1inch. Products like 1inch Aqua let you approve one wallet balance to back multiple positions at the same time across pairs, ranges, and chains. You're not splitting your tokens and you're not depositing them. This is what I think is the special sauce for 1inch here. You're not leveraging them either. It's a totally different way to keep your liquidity active in more markets. You keep the liquidity in your wallet. The protocol can pull it out of your wallet if the criteria on the liquidity protocol meets the criteria that you set for your liquidity. That is exactly what 1inch is doing. It also means that your asset that you keep in your wallet can be applied to multiple liquidity protocols at once. And so you can actually use the same assets and get quite a bit more yield. They did a fantastic research piece with Dune that highlighted how massive this problem is of idle liquidity that's just sitting in these liquidity pools that's not getting used. 1inch Aqua lets you use that liquidity, put it to work, make it productive, earn more for your liquidity. The USS Chainlink says this concludes the Bankers Masterclass. We got the Chainlink Marines in the building today. Absolute pleasure having you guys. Hit us up in the chat. We want to know what you think. And our first guest of the day is the head of legal from Chainlink. We're going to get her up in a few minutes. It's Katherine Kirkpatrick, and we've got her on the show in a little bit. We've got friend of the show, Jose, who is, I believe, at Delphi, I think. Consensus says the U.S. leads AI and China leads robotics. Let's go ahead and play this video. I think this is going to be an interesting take. Ultimately, these two technologies are going to converge. I do think, the U.S. is leading on AI, at least as it pertains to frontier models, but robotics is going to be extremely important. Also, seems as if China is leading on the open AI progression. So let's go ahead, play the video.
You've spent a bunch of time in China touring the Chinese robotics companies, and you came back with a very different view on this, which was that China is actually behind on the software piece, right? There's only one or two Chinese companies that are close to solving the software piece. So they might be very ahead on the hardware, and especially on sort of scale manufacturing of the hardware, but actually they're behind on the software piece. There's been a lot of progress in the Chinese robotics companies. Have you updated your views on this, or where do you sit now? What do you think the end game of US versus China in robotics actually looks like?
I've updated my views a little bit because I've been impressed by the research that's come out of Robbie Ant, which is kind of like a subsidiary of Ant Group. They've released open source models that are kind of at the frontier of Robot Foundation models. They were one of the first groups that released Robot Foundation model based off of the video model backbone, which is kind of where the space has transitioned to and understood is the future of Robot Foundation models, right? Instead of having a VLM backbone. I don't agree with kind of the framing of this country is going to win versus that country is going to win. I think they're both going to develop great technologies and robotics companies. I think it's more of a question is what is more interesting from an investor point of view. And I think this is what you see with not just robotics, but also with cars, EVs, and cell phones, right? Which is both companies or both countries can make great products there. It's like there's so many great companies, and that's great for society, and it's great as a consumer. And great technology becomes very affordable, but it's not great from shareholder perspective. There's still going to be good outcomes. It's just not the multi-trillion-dollar, multi-hundred-billion-dollar outcomes that we're looking for as investors.
Fascinating take here. This is Andrew Kang. He's leading Robo Strategy, I believe, which is a robotics investment company. And I mean, this is what we're seeing play out. I would agree US certainly has a lead on China in the frontier model space. They have the lead as it pertains to the humanoid robots. My take here is that this is such an interconnected world. We know that there's going to be intelligence put into robots in order to let them move freely and interact with the world around them. And we know that there's going to be a robotics play here in the US, which is positioned. I still think it's too early to tell, but I don't think this is necessarily like a very adversarial relationship. We know that China is trying to get its hands on NVIDIA chips. The US has put a trade stop on putting the chips into hands of Chinese manufacturers and vice versa. Yesterday, we were talking about some of the cabling that is required in data centers that the US obviously is going on this tremendous US data center build out, but a lot of the infrastructure and specifically the cabling comes from China. And so we use some of the materials from China in our manufacturing build out, vice versa. I'd imagine that there is going to be US models in some of the robotics, the humanoid robotics in China. And so they are obviously very vertically integrated, but if we have better intelligence here in the US from our frontier models, that is something that the Chinese can leverage and put inside of their manufactured robots, their humanoid robots. So I do think that there is, there is competition, but it is this very, it's not necessarily all adversarial. There is sort of this like bimodal relationship between the two, interdependence between the US and the Chinese markets as it pertains to AI and China. USS Chainlink, framing US versus China, they will both win against the rest of the world. Yeah, I mean, we're talking about this interdependence between US and China. That's where these trade deals come in. We want to make sure that these are negotiated on favorable terms. But the reality, absolutely you're right, USS Chainlink, is that what US and China do ultimately sets the tone and is the leading in the direction for what happens in the rest of the world. Let's keep moving on. Our next news piece here is that GSR says you can truly say there's an inflection point. Here's a throwback. Morgan Stanley's Amy Oldenburg explaining the progression of tokenization from a niche research project to part of the firm's daily business operations. We love hearing from digital asset teams within large financial institutions. Let's hear what Ms. Oldenburg has to say.
Walk us through maybe how crypto and tokenization moved from, I don't want to say that these innovation labs operate in silos, but from maybe the corners of the organization to really being something that's now spearheaded by a person in a function like yours.
Well, and I think it's a good question, because I think that's where you can really truly say that there's an inflection point here, because it's moved out of the innovation. I mean, there's still parts of it that are in the innovation group as we think about things like quantum, or some of the forward-leaning DeFi capabilities that we need to explore, where those are still edge case innovation in many cases. But this is starting to become business operations for us across all the businesses. And that's one of the reasons we needed to set up this central strategy team to really help make sure that this is just part of the daily business operations.
So obviously, as every asset becomes tokenized, it starts to touch more and more of these businesses. Right now, and you heard Frank allude to this, big Frank fan here on this show, friend of the show. And, Frank was discussing how there are these innovation labs and they operate almost independently within, a research and development capacity within these larger financial institutions. But Amy's making the point that these are starting to seep into the rest of the business lines and the rest of the departments of the entire institution, in this case, Morgan Stanley. And so Morgan Stanley, I mean, they've been a leader here. They've developed, some strategies around ETFs, and they've started to incorporate DeFi into their innovation strategy, shows deeper engagement with the blockchain infrastructure directly. So Morgan Stanley is certainly embracing tokenization and going further and further in this route. And I think this is especially the case as we've seen more banks roll out tokenized deposits. We've seen more institutions roll out crypto trading and brokerage capabilities. And so as more of the institutions that their business interacts with on a daily basis in normal business operations, as they start to turn on their digital asset operations, the research and development innovation labs within these companies ends up navigating and helping to guide the rest of the institution as far as how they should interact with some of their partners and some of their internal business operations. So I'd imagine this is only going to continue to accelerate. I think there is this network effect within the institutional networks such that as these things come online, they learn from one another, they try to navigate who should we interact with and how. And then they're going to be looking at the innovation lab within their own company for guidance on how they're interacting with some of their partners' digital asset offerings. And so that's a little bit of an update inside Morgan Stanley and how they're thinking about tokenization. Guys, before we bring you daily equity, I want to tell you about Zama. Zama is our privacy partner here on the show. These guys are doing incredible things when it comes to confidential applications on any blockchain, applying their technology very broadly. We've seen a ton of adoption happen on Zama recently. All right, let's get into our daily equity segment. Okay, so we've got earnings momentum in the equities markets. And so let's go ahead and play this clip of Ed Yardeni on CNBC saying that equity markets have fabulous earnings momentum. Try to get a sense of how sustainable this AI trade really is.
Okay, Ed, tell me about this rally. What do you make of it? Where's this market going?
It's going higher. I mean, my year-end forecast is 8,250, and all of a sudden that looks fairly conservative. Wow. It's only 6.5% away. I think we've got FEMO, what I've previously discussed with you, and that is fabulous earnings momentum. That's really what it all comes down to. I mean, we've got plenty of things to worry about in the Middle East with the Fed, and yet the economy continues to perform extremely well. It's resilient, and we're seeing that in earnings.
You're comfortable where earnings estimates have gone? I mean, if that's everything according to you, then that's everything about what risk lies out there too.
Well, I do watch analysts' earnings consensus very closely, because I think that's really what's being discounted in the market, their outlook for the rest of this year going into next year. And that's called forward earnings when you take a time-weighted average of this year and next year. It's an all-time record high. I think it's going to hit over $400 a share by the end of the year, which will be the expectations for next year. Take 400 times 20, and you got 8,000. Pretty reasonable estimates. I think earnings are going to be somewhat better, and the valuation multiple may be higher. So I'm feeling pretty comfortable with that. Yes.
You had said in the, I don't know, maybe in the last week or so that tech had looked tired. It certainly looks like it's awake again now.
No, actually, on Sunday, I put out a note saying that information technology was on sale. So maybe that was an old note, but obviously you got to stay on your toes here with this market. But I actually pointed out that semiconductors were cheap, that the overall information technology sector was trading at the same multiple as the overall market. And that's unusual because growth stocks usually trade much better. And when you look at S&P 500 and information technology, it looks nothing like what we had back in 1999 and 2000. So all of a sudden, all this talk about this being a tech bubble is kind of thrown out the window.
I mean, there was that note out today from the gentleman at Citadel Securities who suggested, you know, we worked off on our own the excess that was in the market. Now we're primed for a reset. No end to the fundamentals. Sounds like you agree with that.
Absolutely. I think that it is all about earnings. the valuation multiple came down because earnings went up, and investors felt kind of nervous about those earnings numbers, and they weren't paying up for it, and they actually took some profits. Now they're regretting it, and they're jumping right back in.
You like the broadening story?
Absolutely. We've been recommending market weighting information technology since the end of last year, and I think on balance that's actually worked out reasonably well. We've been recommending overweighting financials, industrials, and healthcare, and that's worked out very well.
All-time highs in the equities markets led by the AI trade. This guy's calling for 8250 on the S&P, saying that is FUD, and he might need to raise that expectation by the end of the year. Hyperscalers are up. Semis are bouncing. It feels like it is nonstop go, go, go mode in the equities market. We will continue to monitor this on our daily equity segment. Guys, we've got our first guest. She is the head of legal at Chainlink. And we're going to be discussing the Clarity Act here today. And so we're going to bring up Katherine Kirkpatrick in just a few moments. She's recently the head of legal at Chainlink Labs and host of Dex in the City. Pretty hilarious name there. And she's a former big law partner and general counsel focused on DeFi, CeFi, and L2s. Previously spent 2 years at Starkware and sits on the board of ArchitectFi. And so we're going to go ahead and get her ready. We're going to bring her up in just a moment. Like I said, recently the head of legal at Chainlink Labs, former big law partner and general counsel, focused on DeFi and CeFi, previously at Starkware and on the board of ArchitectFi. Big week here in the Clarity. It's do or die time, and we're going to find out a little bit more. I see that she's ready in the back. Let's go ahead, bring her up. And there she is. Katherine, welcome to the show.
Thanks so much for having me.
Absolutely. And welcome to Chainlink. We've got a few of the Chainlink Marines in the chat.
W's in the chat.
And they are excited for your segment here today. I mean, everyone wants to know. Clarity. What is going on? Where are we? And where do we go from here?
Look, we're in a little bit of a rough place. We are still going to be optimistic. Where are we? The Senate needs to bring the bill to the floor for debate and what's called a cloture vote, which basically means it's a special vote used in the lawmaking process to stop endless talking, to break a filibuster. The issue that we're facing, however, is the Senate has a lot of priorities, and those priorities are just coming before that vote on clarity, and that is our next big hurdle. There were kind of three big substantive topics that were blocking the progress of clarity. Those have mainly been eliminated. One was the yield compromise with the banks. One was that law enforcement didn't really love the provision within clarity that protected developers. The Blockchain Regulatory Certainty Act made huge progress there. The third was a compromise over whether ethical limitations should be inserted in the bill. Also progress there. Now what we're facing, however, is just a lot going on in the Senate.
Okay. And so this is getting swamped down by, I saw there was a college athlete NIL vote, and there's other things with Iran and all kinds of things that are happening in the Senate. This is just one of many that we're faced with. Okay. And so as we kind of look forward to what we can expect, you mentioned the cloture vote. Obviously, we're working on getting that through. I did hear that the SEC is considering rulemaking. They're in a position where they could do some rulemaking if this legislation does not go through. Obviously, we're still all optimistic, but maybe you could just highlight the difference. If this doesn't go through and the SEC steps up and does some rulemaking, does that get us where we want to be, or what are we missing in that scenario?
No. You're right. Chair Atkins specifically said that they were ready and willing and able to do that rulemaking in the absence of clarity. The SEC's ready to do that. The CFTC's going to do that as well, or making progress on guidance. However, the issue is it's very difficult to future-proof all of this. And that's a term that both of the financial regulators keep using. But as we saw with the Gensler administration, all of what he did was pretty quickly undone with a very different posture. That same dynamic could happen with a lot of what the SEC and CFTC are doing, a lot of what they're putting in place. Now, it's not all immediately reversible, and, Chair Atkins and Chair Seelig are doing a really excellent job at trying to think through all scenarios. However, nothing beats legislation. Once legislation is passed, it's extraordinarily difficult to walk that back. I mean, we're seeing firsthand how hard it is to pass it. It's the same process with amending it. So we want and need the legislation because everything that the SEC and the CFTC are doing now could theoretically be undone a lot easier than amending legislation.
Yeah, makes a ton of sense. And it's a terrific analogy, too, the way that you describe how it's quickly and easily we were able to repeal everything that Gensler did, which obviously was very harmful for the industry. But now we want this instantiated into law so that it is not easy to repeal once we do get the regulation that we're looking for. And so, you mentioned how this cloture vote would allow us to kind of break through the noise, stop all the talking, and actually get some business done, get this vote in. How close are we to the cloture vote? We heard, I believe it was the speaker that said they were going to put this on the floor. And we just keep hearing about this deadline on Friday. Is there a likelihood that the Senate continues to stay in DC past Friday?
Maybe. Here's the issue is even if we get the cloture vote, this is not the end of the process. The issue is after the Senate votes on the bill, the bill then needs to be kind of consolidated or squared with the House's version of this bill. So it's not like we get the Senate vote and the president signs and we're all done. There's more that needs to come after this point. So we need to get through all the other business of the Senate. We need to get this vote. We need to get that kind of momentum started again. And we need Congress as a whole to see this as a priority. They see it as a priority now to some degree, but soon everyone is going to be distracted by midterms, particularly if the Democrats have a really strong showing at the midterms. That could change dynamics. We're all rooting for clarity. Chainlink Labs in particular wants clarity because regulatory certainty is a huge unlock for a whole multitude of participants and growth. It's just looking like there's a lot to get done.
Yeah. And that is a great point because Chainlink is very expansive. You're plugged into so many different facets of the industry. Maybe you can just speak on Chainlink's behalf and tell us what clarity would mean for Chainlink and therefore on behalf of the entire industry.
Absolutely. Look, we're technology. We are neutral. We seek to be friends with everyone. And it's in part because our technology can be used by everyone. And what we at Chainlink Labs want to see is a growth in the broader ecosystem. And we absolutely anticipate convergence between, kind of bringing the institutional world on chain. That is a major mission of ours. And that is going to be easier if we have legislation. The interesting thing about clarity is this is the last unlock to what, I always use this as an example. If you look at Econ 101, like Bitcoin has all the attributes of a successful currency, except a clear set of regulatory guidance, fungibility, hard to counterfeit, et cetera, except that regulatory piece. So the same could be said for a lot of crypto. We've come so far, but we still have a lack of regulatory certainty, and that's going to make it harder for builders to build, and it's going to be harder for banks to fully engage.
Yeah, absolutely. And these are the floodgates that we're all looking for to open. They've signaled that they want to get into this industry by setting up these innovation labs within their larger organizations. And there's a lot of research and development happening, but without that regulatory clarity, we aren't able to really start to execute some of that research and development. This is what we're all waiting for. I'm sure the financial world wants it. We want it on chain. It's just a matter of DC. So where are they getting hung up? We've heard so much about ethics. We obviously heard about the yield issue as it pertained to banks and stable coins. Is it still ethics, or is there something else that's holding this up?
I think a lot of it at this point is priorities, frankly. The thing that we've spent a lot of time talking about yield and ethics. And of course, the BRCA, as I mentioned before, law enforcement, illicit finance concerns. But what we haven't talked a lot about is the fact that there are still a lot of legislators where crypto's just not a priority for them. We have come so far in educating regulators about crypto. You know, what I have seen within the regulatory sphere, their understanding of DeFi, for example, they've come so far in 5 years, in 2 years. There's so much expertise and there's so much understanding of how important this technology is. We haven't come quite as far with the legislators themselves. So, you know, if someone doesn't understand something, it's harder for them to prioritize. So, of course, that's always kind of a specter in all of this. The other thing is we've come to the point where we've seen a lot of compromise appropriately shepherded by Patrick Witt, who has been just a fantastic champion of this bill, worked ceaselessly on this bill. But what is a good compromise? A good compromise is where neither parties are that happy. So that's what we saw with yield. That's what we've seen with other points, and we'll see if that holds up. We're all hoping that those compromises hold up.
Yeah. We talked a little bit about if Clarity does not go through, and it would be less likely if it doesn't go through this week, the SEC would step up and create some of those rules. But obviously that, it's a house made of sand, not stone in that case. It's not as solid.
Like the three little pigs, like the straw.
Straw, exactly. And so we talked a little bit about that and the SEC stepping up, but let's just take, a more optimistic point of view. Let's say, they are able to get a cloture vote. It's able to get through. People do prioritize it. And this thing does go through. What could the industry expect to happen next after that cloture vote? And ultimately, if it does get put into law, what is the industry doing to prepare for those next steps?
You raise an excellent point, and I'm old enough to remember when Dodd-Frank was implemented, after the financial crisis. And some people expected kind of immediate changes after Dodd-Frank. No. This kicks off a multi-year rulemaking and interpretive process. So it's not like we wake up the day after the president signs and anything's changed. Probably not. And that's a good thing because things are materially changing within Clarity. So this will give projects an opportunity to look at Clarity very closely, the final version, the bill that the president signed, and make sure that they're adhering to the new guidelines. A lot of the major projects, and hopefully a lot of the smaller projects as well, will be liaising with the regulators, with those, in charge of rulemaking to make sure that the industry is heard and these rules kind of come together in a way that works for everyone. So it is a marathon, not a sprint until we see, final implementation of Clarity. Just like Genius with stables. I think it's funny when someone says Genius compliant stablecoin, because I'm like, well, Genius isn't actually even in force.
Yeah.
Or with, Mika, which is kind of the EU's version of Clarity, it's finally in full force. Now they're already talking about changing it. But it took a while. It was years after passage of Mika before it came into full force.
Yeah. And who is in charge of those rulemakings? Like you said, Genius, still isn't really clarified. There are people that claim they're Genius compatible, but they're not Genius compliant. Somewhat of semantics there. But ultimately, if this does get signed into law, we're going to need to see some rules. Who's in charge of making those rules?
Yes. And the bill is great about basically deputizing or designating a variety of agencies to make rules specific to these different categories. So we're looking at a bunch of different regulators with different mandates who would make rules of, Treasury for illicit finance, obviously the SEC and the CFTC, hopefully working very closely together on ensuring that the rules kind of work in harmony. I think there's a lot of good to that. Obviously, one of the big upsides of Clarity is that we will see a token taxonomy. We will get that determinative consideration as to which crypto asset is, a commodity versus a security. That's all going to be done through rulemaking. So there's a whole host of agencies involved, and there will be industry involvement, extensive industry involvement to ensure that the underlying tech is fully understood in the implementation process.
I've got a bit of an off-the-wall question for you, but it just popped into my mind based on everything that we're seeing out there in the industry these days. What does Clarity say about meme coins? Because we got Robinhood, listing, like Robinhood US listing Cash Cat, this, meme coin that originated from their chain. does the Clarity Act have anything to say about meme coins?
Yeah, that's actually a great question. And candidly, I haven't focused on meme coins in a while, so I will double check and get back to you. But I will say this. First of all, I think we've all been thrown by Robinhood Chain. That activity built for institutions, dominated by meme coins. And I know everyone spent way too much time looking at meme coins during the pump.fun craze there for a while. Not my favorite part of crypto, but fine, they're fun. But, you know, as a lawyer, you're like, crypto's a serious thing. And then this happens.
Yeah.
But, you know, I think the interesting thing is, look, meme coins have been discussed a lot as to, are they securities, are they commodities, or are they a third legal category, collectibles? Yeah. So that is one of the best parts of Clarity, is that we get more transparency surrounding the categorization of all these different assets. Are they even financial assets?
Exactly. And I didn't mean to put you on the spot there, but it's just, it invokes curiosity. I mean, there's so much imagination by people in the industry creating new things. And then the legislators and the regulators come in and they have to try to make sense of all these weird and complicated things that don't really fit nicely into one bucket. And so, yeah, they certainly have their work cut out for them as a result of this. And I mean, it's just incredible. We know that there's this, you know, a lot of, attention being put on Trump's meme coin and preventing that from happening. But, you know, this carve out for meme coins in particular is just a little bit odd. Yeah. Okay. And so, otherwise, I mean, what are you focused on, you know, as we kind of get down to the finish line? What are you paying most attention to as it pertains to Clarity?
Look, I'm really excited about Clarity because what I'm looking at actually is the global environment for legislation. Mm-hmm. And this is a policy-based argument as well. Like, obviously we're behind many other countries, and that gap is growing. You know, in the past weeks, not months, we've also seen major movement from Japan on crypto market structure-esque legislation. We saw a whole package from the United Kingdom, good and bad, but will likely make it a more friendly jurisdiction for kind of crypto institutions. So it's kind of like, let's get this done, guys, because obviously the money's here. Everybody wants to play here. Nobody wants to leave. Everyone, and I'm speaking, you know, a lot of the global market participants, they want to transact here. People want to build here. And this is an unlock for that. So crypto has had to fight a narrative for years that we all know is absurd, the kind of crypto crime narrative. We've spent a lot of time and energy demonstrating that that's not what this industry is about. It's about the technology. It's about making things faster, cheaper, more effective. We're at that point in time where, come on, US, let's put your money where its mouth is. Like, let's do something good for America's bottom line. And we've seen some really encouraging pro-innovation activity from our regulators. We need that support from legislators. So that's what I'm hoping, that kind of policy-oriented power, we see the follow through there.
Yeah, and I'm curious, just kind of as we come to a close here, if you think that the bill in its current form is sufficient, because we've seen industry partners, you know, across the board. Brian Armstrong, most notably, you know, was against it. Now it seems as if he's for it. So there was some evolutions in the bill. It feels like, you know, there's Republicans that want to get this through for the sake of, you know, industry partners. And then there's Democrats that want to regulate the industry. They may not want to legitimize the industry in some regard, but they do want to regulate it safely and responsibly. This could be the way to do that. And so do you think in the current form, you know, this is sufficient for the industry, for Republicans, and for Democrats?
Yes. Because, look, don't let the perfect be the enemy of the good. This bill is not perfect. No bill is perfect. No bill is ever going to be perfect. I mean, the crypto industry, without anybody else involved, could get together and there would be no bill that would make everyone happy or would be perfect. This bill is good. This bill gets us where we need to get. It's a great starting point for that discussion and that engagement. So, you know, let's get it done. Let's not get hung up on, you know, it's really hard to regulate an industry that covers everything from meme coins to infrastructure to DeFi. I mean, I could go on and on and on. So I think that the legislators have done an excellent job at this point in time.
Yeah, incredible. Katherine, Kirkpatrick, thank you so much. Head of legal at Chainlink. Fantastic segment. We've been talking about Clarity so much, but I really do feel like I learned quite a bit from you today, and we were able to round out some of the conversation as we draw closer to the finish line. So thank you so much for joining. We'd love to have you on again after we cross the finish line, one way or the other. We're going to find out what happens.
Happy to be here. Thanks for having me.
Absolutely. We'll see you again soon. Thanks so much. All right. We continue on. We just draw closer and closer to what is seemingly the finish line for Clarity. We've got our next guest, Haseeb, on stablecoin spending coming up. We're going to talk a little bit about what stablecoins may face in the new iteration of the Clarity Act. Also, the Genius Act is just continuing to progress as we get ready for some of the rulemaking there. So we're going to bring up Haseeb in a little bit. Really great segment with Katherine. Let's see what we got going on in the chat. Word on the street is he's trying to get to 1,000 Zcash total and sign off for a few years. Oh boy. Andy, did you short Zcash yesterday? What else we got here? Token needed. Let's get Clarity through. How does Chainlink accrue value to their token holders? Throw the lads a like and a subscribe. Oh yeah. Oh yeah. Oh yeah. Seems there's no urgency for people in Washington because the Clarity Act should be a national emergency. I agree. I mean, it's a national emergency for our industry here. Also, I mean, guys, how are they prioritizing things like NIL deals over the Clarity Act? Doesn't make any sense. So we should definitely get this thing pushed through very soon. That's what all of us here want. And I'd imagine that this is going to open up new fundraising for some of these politicians. I mean, it just doesn't seem like there's anyone that's hating on this. Everyone wants this to go through. How are they getting more momentum on things like NIL deals rather than the Clarity Act? I mean, this is something that we've been focused on for so long. So it's certainly do or die time for the Clarity Act. And we're going to continue to check it out. All right, next up, we're going to bring on Haseeb for our Stabled Up segment. You guys know Haseeb well, and you're familiar with our Stabled Up segment as well. So we're going to get him in just a moment. And let's go ahead and get ready for our Stabled Up segment with Haseeb.
Welcome back to another episode of Stabled Up, our premier weekly show covering the ins and outs of digital dollars, stablecoins, and the future of decentralized finance.
The show is made possible by Frax, and Frax is powering the financial engine of the internet, powering FRX USD and Genius compliant stablecoins. This is the stablecoin super cycle made possible by Frax. Now enjoy Stabled Up, our weekly stablecoin show. All right, we're back. We got Haseeb and we got air horns playing in the background. This is our Stabled Up segment with Haseeb, powered by Frax, our stablecoin partner for Stabled Up. And it's also Clarity Week, so we've been talking about Clarity this entire week. Haseeb, it's been a little while. How you holding up, man?
I'm doing good. Obviously a lot going on, and Clarity is starting to look a little bit dim, but I'm still feeling optimistic, but that's kind of my MO,
Yeah. I mean, I feel like in this industry or any industry, really got to stay almost perma optimist in order to just kind of make it through. Especially these times feels. Would you consider this like the apathy, like the classic apathetic market conditions we kind of face?
Yes, very clearly you see a lot of market apathy. Things are moving pretty slow. Markets are sluggish. The thing is, markets aren't really reacting that much to anything.
Right.
So. People say that, oh, it's terrible that Clarity is not passing. The reality is that market doesn't react to Clarity almost at all. So if you remember in February, Clarity was at like 80%. Then it was at like 50-50 a couple weeks ago. Now it's at 15%. Mm-hmm. You cannot see it in the charts. You can't see how markets are reacting to Clarity odds. So like if you just regress Polymarket against the Bitcoin or ETH price or alts, doesn't predict anything. Same thing happened. If you remember, there was bloodbath in the Korean markets. Just a few weeks ago, Kospi, round trip like 40, 50%, whatever it was. You couldn't tell that was happening in crypto. Normally, Korean retail is like the index of crypto, but we're kind of in a world now where they're all busy trading memory stocks and getting their faces ripped off. And crypto it literally didn't make a blip.
Yeah. They took all the liquidity and all the volatility with them over
Pretty
there
much.
into the Korean markets and the AI equities. And so, I think that's effectively where we find ourselves. I've heard a take just on Clarity is that the market doesn't like uncertainty. And so if Clarity Act doesn't go through and that's it, or the Clarity Act goes through and that's it, either way, we're going to get more consensus, more certainty than we have today. Either way, the market's going to perform well going from a position of uncertainty to certainty once this thing ultimately crosses the finish line one way or the other.
That's a very simple story. If that were true, then you would see the poly market odds predict, when it was at 80%, it's like, okay, well, this is going to pass. Therefore, markets should pull the outcome forward and say, okay, well, we have the clarity. Therefore, markets should be positive. So as uncertain, look, right now the odds are 15%, right? If your theory is true, then that should mean 50% is the worst. 50% is like, we don't know if it'll pass or not. So we don't have certainty. When the odds go down to 15%, that should be bullish because now we know it's not going to pass, right? Obviously, that does not describe markets at all.
Right.
So I think this story is not true. I think the answer largely is that, look, clarity is nice to have. Does it really affect the asset prices of almost anything? To what extent does clarity affect the value of Bitcoin? Well, almost pretty much nothing. Bitcoin has no relevance to clarity. What does it affect for stablecoins? Not really anything. Okay, now that they can't pay yield, but they're already kind of, that wasn't a big part of why stablecoins are growing. And aside from that, ETH is already a commodity. We already know what ETH is supposed to be. Most of these things, and the reality, of course, is that we know there's going to be rulemaking such that the SEC and CFTC are going to step in and do this stuff anyway. The last thing I'd say, Qureshi has markets on clarity going into next year. Okay. And what you can see from the Qureshi markets is that actually they're pricing 30+% that clarity passes next year and more than 50% that it passes by 2028. Meaning that, everyone who's telling you like, oh, it's now or never, if clarity doesn't pass now, it's over, and, kiss this stuff goodbye. That's not actually what markets are saying. Markets are saying like, look, there's going to, look, if Democrats win the House, the bill is going to get marked up again. There's going to be a recompromise. Lines are going to get redrawn. It's not going to be as favorable of a bill to the industry as the current version looks. But likely there will still be some kind of compromise and some kind of bill, because at the end of the day, both sides want there to be a bill. It is a bipartisan bill in the sense that, there's some basic stuff that everybody agrees on. Like, hey, there should be some kind of regulatory regime. I think everybody agrees on that. Exchanges should be regulated in a clear way that's written in the laws. Yeah, we all agree on that. When an exchange goes bankrupt, the assets should belong to the customers, not the company. Yeah, everyone agrees on that. There's a lot of stuff like this that clearly there should be a bill. Yeah. So it's ultimately just a matter of, okay, if there's a new Congress and there's a different set of power constraints that have to get navigated, that's going to change the face of the bill. But at the end of the day, it's more likely than not that there's going to be a bill that gets passed at some point within this administration.
Yeah. Like you said, there's a ton that everyone agrees on, yet the bill is 600 pages. And we throw a lot of other stuff in there that people go back and forth on and form compromises. We saw some similar situation play out with the Genius Act. And, that went through much more smoothly than the Clarity Act is going through. And recently we've been talking a little bit more about the Genius Act because it feels like we're going to get some rules actually, and that was passed a year ago, but we still haven't quite gotten the rulemaking that people expected from the Genius Act. Do you have any sort of update on given this is stablecoin segment for today, what the Genius Act, where is the status today? Does it have any relevance? Do you see stablecoin companies sort of preparing for the rules that could come out of the Genius Act?
Yeah, the reality is that the rulemaking has been delayed, and the rulemaking is, a lot of the text in any bill is going to delegate to an agency that is an expert, right? So lawmakers are not experts, and they also know by the time they write the bill and by the time the bill goes into effect, a lot can change. And they don't want to say like, okay, well, let's just put it from, clay tablets from on high of here's exactly what everybody should be doing. What they kind of do is they say, okay, well, the Fed should be responsible for this, SEC should be responsible for this, OCC should be responsible for this, and so on. And now they're responsible. What do they do? What are the rules? That is up to them, and they got to go do the work. And, it's the government. So stuff moves slowly. People miss deadlines. And that's kind of what's going on right now with Genius. Now, at the end of the day, like the most important question is not when do the regulators make the rules. We kind of know at high level the contours of what the rules are supposed to look like. And more importantly, the signal has already been sent. And the signal is, you can do this. It's okay to do this. It's okay to create stablecoins. We want you to do so, and you will be safe to do that within the guardrails of, the American economy. And companies have heard that. And so they're launching stablecoins. And they're basically going to say, look, I know that the exact regulatory regime is a moving target, but this market is so big, I don't want to be late. So that's why you're seeing USD. It's why you're seeing, these banks starting to get into the game. It's why you're seeing stablecoin consortia. All of these players are entering into this market, and that includes like, Klarna and, all these other fintechs that are starting to get into stablecoins, including Stripe. The reason why they're here is that they know, I don't want to be late. If I'm late, I'm going to lose market share. I'm potentially not going to be able to compete. And so I'm willing to take on some degree of regulatory uncertainty because I know where the puck is going. Yeah. That is most of what you need to galvanize the market. So it's not that big of a deal that the regulators are a little late.
Yeah. And Genius was a lot narrower. And so people can think of themselves as stable coins. They can launch these things. They, like you said, know generally where the puck is going. Even if it's not specifically, they can remain nimble enough to adapt a little bit later. The one that comes to mind here recently announced that they're doing their stable card powered by Rain is Western Union. Not that they're launching a stablecoin themselves, but they're building on top of Dragonfly portfolio company Rain. Maybe you could just describe like what the value proposition is for a Goliath like Western Union to now come in and build on top of infrastructure like Rain.
Yeah. So if you're Western Union, I think you're well aware that stablecoins are starting to eat your lunch. They're not stupid. They're not that stupid, I should say. Like they know that, hey, the margins, the intermediaries using the, basically using the banks and the correspondent banking system in order to move money is getting outcompeted in a lot of corridors by stablecoins, right? They see the writing on the wall. They realize that, look, our advantage as Western Union is not necessarily this infrastructure that we spent all this time building. That is our advantage, but it is increasingly getting displaced and outcompeted in a lot of corridors. And we need to have some way to compete with them because at the end of the day, our brand, our value is not just the infrastructure of, the money changers and the routes and all that stuff. The other thing is that we have the trust, we have the brand, we have the customers, we have the brand awareness. People know us and they know they can trust Western Union. So, it's a little bit like when you see the sports books announce, I'm going to create a prediction market. Right? Like, why are they doing that? Because they realize, oh, shit, this is where it's all going. But at the end of the day, I'm DraftKings, I'm FanDuel. I have the brand, I have the credibility, I have the customers already captive on my platform. I might as well use this as a way to potentially allow myself to not go quietly into that good night. So I suspect that this is a lot of what they're seeing is that they're probably focusing. I mean, I don't know, I'm speculating. I'm assuming that they're focusing these cards in corridors where they already see a lot of stablecoin adoption. And they see their market share decreasing, and they're saying, okay, let me go get a piece of that. And the advantage, of course, of Rain is that by using Rain infrastructure for stablecoin-backed cards, they can split some of the interchange. So it might not be as lucrative for them, I don't know, as it is for them to be running their traditional Western Union payments. But it's a lot better than having dwindling, market share going to zero. Right. It's like, okay, well, it's still pretty good economics to be able to be a card. It's the reason why you have all these neobanks who are, launching cards on top of Rain is because they keep a huge chunk of the interchange. It's a pretty good business model. And so it's very much, the business model of Rain has been such that they actually allow, by their nature and by the economic split that they offer to these card issuers, that actually you can build a business on top of Rain. It's not one of these things like, it's very hard to build a business on top of Western Union, a scaled business, but you can absolutely build a business on top of Rain. And it's part of the reason why they've been growing so fast is that they share a lot of the economics back to the neobank or the issuer.
Yeah, it feels like there's this value accrual story. Part of the value accrual is, or the value proposition is the efficiency element. That might create some sort of productive value, and then they're going to charge some for that value. But if they leave a little bit or enough, then another business can come in. They can also take a share of that productive efficiency and charge their own spread. And then therefore, then the entire productivity gets monetized accordingly. And it's smart for Rain to do that because then they end up with a whole market on top. It's like, I forget where I was the other day, but you've got sports cards, you've got all these Pokemon cards where now there's markets on top of the underlying, infrastructure, if you will. It creates a whole secondary market effect as a result. And so I also want to just check. We don't have to spend a ton of time on this, but I've been hearing more about it. The most recent one was Wells Fargo, because a lot of bigger institutions, specifically banks, are getting into this game. And a game I use broadly with tokenized deposits, stable coins, feel very similar in the way that these institutions are entering the market. How different is a tokenized deposit to a stable coin? What does that allow a bank to do versus just, why are we seeing banks go into the tokenized deposits route versus launching Wells Fargo stablecoin?
Think that tokenized deposits are basically completely uninteresting.
Okay.
So what is a tokenized deposit? A tokenized deposit is, normally let's say I'm a Wells Fargo customer, you're a Wells Fargo customer, I can send you money instantaneously. And the reason why it's instantaneous to you as opposed to, a customer of JP Morgan is because it's just moving money around on the internal bank ledger, right? No money has left the bank or entered the bank. So there's no interbank communication that's happening. So in that world, if I'm sending an intra-bank transfer, it's instantaneous, okay? So now, instead of, with a tokenized deposit, instead of going to my Wells Fargo thing and typing in your number and then sending you money and it going to you instantly, now I can do that on a blockchain. But a tokenized deposit, every single holder of a tokenized deposit must be a customer of that bank.
Okay.
So it's simply a different database for the intra-bank transfers of a bank. That's what tokenized deposits are.
Okay. I agree with you. That specifically is totally uninteresting. But do you think that this is potentially a stepping stone to an interbank transfer if we get some sort of interoperability between a Wells Fargo tokenized deposit network and a JP Morgan Connexus? Still private permission chains, but not tokenized, just intrabank.
So if you're doing that, if you're doing intra-bank settlement instantaneously, right? If banks are settling instantaneously with each other, that is potentially more interesting for increasing the efficiency in the correspondent banking system. However, banks can already do that. They choose not to. It is not a failure of technology that the banks cannot settle with each other instantaneously, right? The fact that banks settle up at the end of the day with each other is a choice they are making in order to make their grossing of transfers between each other more efficient, right? They actually prefer to allow transactions to accumulate over the course of the day because they sort of net against each other. It's like, okay, I would have sent you some money, but then you would have sent me some money. I would have sent you some, you would have sent me. We're essentially extending credit to each other effectively for the net payments. And then at the end of the day, okay, well, actually, I sent you, 4,000 transactions. You sent me 5,000 transactions. And the net actually is that I only send you, a couple million at the end of the day because, there's the debits and credits on both sides. That's what banks do with each other, right? They don't have to do that. They could be settling with each other instantaneously. They're choosing not to because it's more capital efficient. So the interbank settlement system, are they going to be willing to settle with each other using each other's tokenized deposits? It's not obvious that they would. They might say well, actually, why don't we just keep doing what we're doing? And instead of sending each other tokenized deposits, instead, we just keep kind of netting each other on a piece of paper, and then at the end of the day, then we settle with tokenized deposits. Okay. But if you're settling at the end of the day with tokenized deposits or with actual bank deposits over FedWire, who cares? At the end of the day, you haven't improved anything. You haven't made anything more efficient. So it's a choice that banks are making to settle this way.
So I can imagine this convoluted story of tokenized deposits as a stepping stone to interbank blockchains and then tokenized equities and tokenize everything, right? And then everything's on chain. Everyone's more capital efficient. And I can kind of picture that end game. I don't know exactly what it looks like, but it sounds like a nice story. When you think of an end game, what do you think of I mean, capital wants to be free. It wants to, move and whatnot. Do you have an end game as far as like how these things, if we do move just more capital on chain steadily over the next 5, 10, 15, 20 years, what does that look like?
Look, I would say tokenized deposits are not really moving capital on chain.
Right. Okay.
Tokenized deposits are not free. They are not open. Not everyone can interact with them. Only customers of a given bank can interact with them. In which case, what can they do with a tokenized deposit that they couldn't do on the Wells Fargo website? The answer is basically nothing.
Mm-hmm.
Basically nothing. It enables no new functionality. It doesn't enable programmability. It doesn't enable, almost anything that you would care about. You can't create borrow lend market. I mean, maybe if it's internal to the users of Wells Fargo, but there's a good chance that Wells Fargo would be like, wait, you're creating your own money markets on our deposits? Well, we have a money market product that we have, so you can't do that, so stop it. So the reality is that this is just not where you should be looking for, the kind of open, permissionless innovation that blockchains create. This is intentionally a kind of middle ground. It's like an intranet. It's like a walled garden. It's like, okay, you can go on, JP Morgan net and look at websites that JP Morgan created. Who cares? That's not what the internet is for. That you've enabled none of the value creation that the internet makes possible, right? Like if you think about, I can OAuth into this website using JP Morgan, or you use Plaid to like connect this to my, that is using the connectivity of the internet. That's kind of more like what stablecoins are than what tokenized deposits are. So stablecoins are permissionless. They're open innovation. Anybody can build anything on top of a stablecoin. They settle instantly no matter where they are. They're non-KYC. They're not a walled garden, only closed to the users of this particular bank. That's why stablecoins are so disruptive. So there's always been this kind of like fake crypto stuff, whether it's like enterprise blockchains or whether it's, insert all the various, Corda and R3 and all these consortium chains from the past. There's always been this kind of weak version of the technology. Mm-hmm. And the answer, it's this compromise that never goes anywhere, never works, never built anything of value. So in the long run, we all know the answer. At this point, even the US government knows the answer. Right? If you listen to what Secretary Bessent is saying, you listen to what Trump is saying, they know the answer is stablecoins. Mm-hmm. The bill, the Genius Act, is about stablecoins. It's not about tokenized deposits, not about CBDCs, not about any of this other stuff. It's about stablecoins. I think we're at the point now that the industry understands it. Even the government understands it. The banks are the last ones to get the message because it's not in their interest to do so.
Yeah. I want to talk about OpenUSD from Tempo, and there's big consortium around OpenUSD and whether or not you think it has a real shot at becoming a majorly adopted stablecoin. The last thing on this that I just want to talk to you about is like how the permissioned blockchain ecosystem that you're absolutely right, we've seen time and time again, it never creates anything of value, how that complex has evolved. Because I agree, things like tokenized deposits, totally uninteresting in their current state. Maybe they change, probably they don't. But then you've got something like a DTCC network. We don't know exactly how this is going to look, but it feels a lot more interesting. It feels a lot closer to the reality that we all know is ultimately the winner here, which is the public internet of blockchains. How do you parse through like the permissioned institutional chain consortium that seems to be doing something of value versus the ones that aren't?
So to be clear, I don't know what the DTCC is doing, so I really don't want to comment on something of which I have no knowledge. And I'm not trying to say that every consortium chain is worthless or every single enterprise chain is worthless. Very clear there's been a phase shift over the last 3, 4, 5 years of people realizing that the value of a lot of these enterprise chains is the connectivity to the wider market, right? It's like, okay, if you are creating assets that are then exportable on other public chains and you're connected to other public chains and you're interoperable with other public chains, that is where value is created, right? It's through the communication, through the openness, through the sharing of state and information that you can actually get some value from putting something on a blockchain. If you were just putting something on a blockchain to say, hey, our old system sucks, here's a new system, it happens to be a blockchain, that may be an improvement, but it was not necessary to use blockchain to get that improvement. You could have just created a brand new database, and maybe you couldn't get the funding for it or couldn't get the budget for it. But in principle, obviously, it's possible to have a real-time gross settlement system without a blockchain. There are many real-time gross settlement systems around the world. They don't use blockchains. Or they don't all use blockchains, I should say. So all of that is to say, I do think there is a changing of understanding from a lot of the enterprise about about how you need to architect these systems to create value. So that's why I don't want to claim that I'm blanketly bearish on all of these things, but I think tokenized deposits is kind of the apotheosis of the wrong answer.
Yeah, makes sense. Yeah, and as we're sort of, then just to contrast that with like Robinhood, right, which is obviously one of the largest financial institutions at this point, but is able to do this in a chain that has interoperability and composability with ETH. It's an ETH-L2. Would you say Robinhood has gone about this the right way?
Yes, decidedly. And it's very obvious from the way it's getting adopted, from the way developers are excited about it, the way you see TVL flowing onto that chain. Like, that's the right answer. And I think increasingly people are going to start taking their cues from that. Same thing with Tempo, right? Tempo, obviously the right answer is that it's open, it's permissionless, everything's built out in open source. And when people see that, they see, Stripe, this $100 billion plus company, Robinhood, $100 billion company, they're doing it the right way, and this is why they are good at what they do, and they have their finger on the zeitgeist.
Yeah. And since you mentioned Tempo, OpenUSD from Tempo and Stripe, they had a massive backing of partners, at least on the initial announcement. And then there was actually there was a friend of the show from Lorenzo from ARK Invest who has some great kind of like medium-sized Twitter posts as of late, commented on the Visa earnings call. Someone asked him about OpenUSD, and he said, well, we're sort of, he kind of took a step back and wasn't really gung-ho about OpenUSD. We're incredibly neutral. We want to support all of our stablecoin partners. And so it kind of seems like all the partners that were listed on this grandiose announcement, they support it, but just as much as they support Circle and Tether and some of the other stablecoins out there. And so how real do you think OpenUSD is, and how much of a shot do you think it has at unseating the stablecoin duopoly?
So I think I've echoed the core point that it sounds like Lorenzo made, is that very bearish consortia. I think, if you remember way back in the day, USDC was supposed to be a consortium, and it was basically just a consortium of two at the end of the day, which was Circle and Coinbase. But originally, Center, which was the organization that issued USDC, was supposed to be a consortium with many different players, and that went away. So what you're seeing with this consortium, if you remember early on, there were a bunch of Korean companies that were supposed to be part of the consortium, and they're like, what the hell is this? We didn't hear about this. We didn't put our name on this. Please remove us. And you're hearing increasingly from a lot of the players that it's like signing a petition. You're like, I guess I'll sign, why not? Obviously, I'm not putting any money up. I'm not doing anything. So it's a free option, right? And you're always going to exercise the free option. So I think the reality is that, this thing is basically being quarterbacked by Bridge or / by Stripe. That seems to be the reality as we've, the dust is cleared. Now, look, Stripe is a real player. But of course, Bridge already had a stablecoin, didn't get a lot of adoption, wasn't really a significant player. And lastly, look, you just think about base rates, right? Like the duopoly is really, really powerful. Most duopolies do not easily get displaced. That's why we call them duopolies. So, of course, it's long odds for anyone, no matter how successful you are, to try to displace that. Does OpenUSD have a shot? It's not zero, but we kind of got to see the game get played. So, what do they? It's not live yet. So let's see it go live. Let's see what they have up their sleeve. It's hard to bet against Stripe. They're obviously very good at what they do. But it's pretty clear that this is right now it's giving Libra vibes, is what I would say.
Yeah. Circle and USDC and USDT had some very early mover effects and, kind of grew with the industry as it grew over the last few years. OpenUSD, very, very new. But I do just find it cool and sort of a nice experiment that we have Tempo, which is fundamentally a payments company, putting this forth into the market, whereas USDT was born out of Bitfinex and USDC sort of born out of Coinbase. Both of those exchanges aren't really coming at it from more of the payments angle. Now USDC and USDT are trying to get into the payments game, whereas Stripe already has such a big piece of the market share in the payments game. It feels like there's going to be a different path to market. What do you think there, kind of path dependency is going to play a role here?
Possibly. I think the reality is that very little payments in stablecoins settles on Stripe. Stripe is predominantly a card processor. So, obviously they're very bullish on stablecoins, and they are trying to skate to where the puck is going as they should. They're very, very bullish on stablecoins, but it's not a meaningful part of their business right now. And it's just not, these are not the merchants that are trying to integrate stablecoin payments. These are just, they're just card processors. That's most of why they integrate Stripe. So I think we should also be wide-eyed about there's often a lot of magical thinking about large companies. Stripe is a large company. Obviously, they're betting hard on stablecoins, but they're not betting that hard, right? They have a core business. They're doing really well. They're crushing it. They're not looking to disrupt their own business. They're not looking to push people away from credit cards. They're not looking, like they'll take the market share if it's there, if it's presenting. But for the most part, like this is just not how stablecoins are mostly moving. To some extent, if you're talking about stablecoin payments, most stablecoin payments are happening through something like Rain rather than people trying to settle at like some kind of stablecoin checkout. That's why Rain is growing so fast. That's why the stablecoin card business and all these neobanks are growing so quickly. This is an affordance that consumers are very comfortable with and that they like and that merchants already adopt. So this is a big part of the reason why, okay, if that's where we're going, that this is basically these stablecoin-backed cards where most of the settlement is coming from, then Stripe doesn't have to do anything, right? They're already processing a lot of these cards. So, whether it's stablecoins in the back end or not, from their perspective, it's just, Visa card's a Visa card.
And so maybe you can just help unpack this. Are Rain and Stripe competing with each other? It doesn't sound like it. It sounds like more so Stripe is helping facilitate the processing of cards, Rain cards.
Correct. So Bridge does have a competitive product with Rain to try to issue cards out of Bridge. So they have a competitive product. They're a very small player relative to what Rain is today. Rain is growing and has probably, I don't know, certainly more than 50% market share in this space, whereas Bridge right now, relatively smaller competitor in that space. So they are competing directly on that front. But on the processing side, I mean, Rain is, ultimately used to issue the cards, and it's like the kind of technology and the program manager for the cards. Stripe is what the merchant integrates to process the cards. So if you're, some Shopify or whatever, or some checkout thing, you integrate Stripe, and then you use that to process the cards, right, that you're getting. And it's all the cards, not just Rain cards. So issuance is a totally different game. That is where Rain is predominantly playing, and that's the space that's growing like crazy within stablecoins, not stablecoins at checkout.
Yeah, got it. Makes sense. Haseeb, got a couple more minutes. We got a couple questions in the chat. One of them's on all of the cold storage, self-custody debacle things that have been happening recently. Do you believe that cold storage devices are dead? This is a question from our friend New Type Trader. Is it now unfortunately better to keep your Bitcoin in an ETF or sell your Bitcoin for something that is quantum resistant? That third question sounds totally different, but
that's a very different question. Okay, so number one, I would say, look, if you are an ordinary person, you should almost certainly be using some kind of third-party custody. The reality is that there's just too many foot guns for ordinary people to be self-custodying. This has nothing to do with Cold Card. This is just a general rule of thumb. If you own Bitcoin ETF, obviously they're very low fee load. Or if you just hold assets in an exchange or whatever. Look, if you own the Bitcoin ETF, basically you're holding it with Coinbase because Coinbase custody does the custody for the ETFs. So the answer, by and large, is probably, if you're an ordinary person, you should be doing that, unless you have a good reason to be self-custodying. And there are good reasons to be self-custodying, but just because some Bitcoin maxi on Twitter told me to is not a good reason. So now the reality is that Cold Card was a very small vendor in the Bitcoin hardware wallet space, right? So clearly they had some very, very bad security lapses. There's been a lot of reporting now about their coding practices and the fact that they did probably almost no AI hardening, given that this vulnerability was found for a couple dollars of AI spend. So that tells you this was kind of a delinquent vendor. They have like 1 to 2% market share of the Bitcoin hardware wallet space. Like this is not a major player. So probably what it does mean is that you should only be using the biggest vendors when it comes to security critical stuff, because they can afford to spend the money to make sure that their stuff is absolutely robust with the latest generation of cybersecurity scanning from AIs. But long story short, you're probably pretty safe holding the Bitcoin ETF, but that doesn't mean, look, throw away your ledgers and your Trezors and like all this stuff is fucked. I don't think that's true.
Yeah, you make a good point on the largest custodians are the ones that are the most battle resistant because they have the most resources to deploy in their cybersecurity, ammunition, and artillery. Right. So it makes a ton of sense there. Other question is, how big do you think Rain can get? I guess in terms of TAM or market cap?
Yeah, look, I mean, we're investors. I think Rain, it can potentially be one of the biggest companies in crypto. I don't say that lightly, but I think if you just look at the TAM of how much of payments can be potentially run through Rain cards, obviously, card issuers are a huge business. And if you just think about, once upon a time, we imagined that stablecoin payments were going to be happening through, you see these images in like Venezuela or Turkey of like, some corner store has like a "We Take Tether" sign in the window, right? Mm-hmm. That only really happens in the most fucked up countries. There's places where there's very high inflation, very low state capacity. Basically like failed states are where you see this kind of thing happening out in the open. The reality is that most places, even that have high inflation, they don't have merchants openly taking stablecoins, and it may not even be legal for them to do so. It's in these places where you don't require the two-sided market to cohere, where instead users can decide, okay, I have stablecoins on the back end of my card, but every single merchant takes this. Every e-commerce platform takes this. If I'm buying something from AliExpress or Alibaba, or I'm buying something from Amazon, I can still use the same card, and the merchant never has to care. Nobody in the middle has to care. Stablecoins on the back end, but everything on the front end is exactly the same. And the reality is like that we've learned, it's not like an ideological thing. We have learned that like that is just way more effective for adoption for the stablecoin stack, and still maintains a lot of the efficiencies that stablecoins create. So I think the reality is that, look, at least in the beginning, this is the thing that is going global, that is papering over the world. You see it growing almost everywhere, but the end game, like what is the end game? The end game that I imagine is that, look, at some point, let's say you are Amazon, right? And you see, okay, here's a card that somebody just typed in. That a lot of people use Rain cards, right? Mm-hmm. So you see this card come in, and you ping Rain's API. You say, hey, I just saw this card. Is this a Rain card? And Rain's like, yeah, this is a Rain card. They say, oh, okay, cool. Well, why don't we just not run this through Visa? Why don't we just run it directly, like just settle in stablecoins? You send me the stables, and we don't bother with all the Visa stuff, right? In that world, now all of a sudden you are actually using stablecoins as an alternative settlement rail. Mm-hmm. That is the end game. That's the end game. The end game is that stablecoins actually disintermediate the payment networks. Once you get big enough, ubiquitous enough, and you have this alternative payment system. Now, we're very, very far away from that. And to be clear, that's not going to happen anytime soon. But back in the day, we used to talk about how, like, man, why don't Apple Pay and Google Pay just run on stablecoins and cut out all the traditional payment rails, right? Like, that's why it's there. It's open. It's permissionless. You don't have to charge. There's no gatekeeper. Nobody charges rent on using stablecoins. Mm-hmm. It's actually neutral infrastructure. Rain is the first thing I've seen that can get close to that. And that's a big part of the reason why I think it can be an absolutely enormous company.
It's huge. Very cool to actually see this get put into fruition. Haseeb, man, absolute pleasure as always. Last one I got for you actually is we got Jesse from Base coming up next, and I'm just curious if you have any questions that I should ask Jesse.
My biggest question is, how's he feeling? I know it's been he's gotten his ass kicked over the last month or so. So I'm hoping he's got his mojo back and he's feeling positive.
Yeah, same here. Cool. Haseeb, you're the man. Appreciate you coming on as always, and we'll see you again soon.
Thanks, team. See ya.
See ya. Fantastic segment, as always, with Haseeb. This one mostly about stablecoins, also on the Clarity Act a little bit. We're going to get right into Jesse. I think he is just about ready behind the scenes, and we're going to go ahead and bring him on the show. I mean, what else? What is there to say about Jesse? I mean, you guys know him. Fantastic lineup today. I mean, give me some air horns, because what other media show has survived these market conditions, let alone brought together some of the best in the business here to chat on a random Thursday? I mean, big week this week, big lineup here on the Rollup, and so man, we're gonna keep this momentum up. We're gonna keep this show rolling, and we're gonna bring up Jesse. I see he's ready behind the scenes. Let's go ahead, bring him up. He is the creator of Base, and well, he's a Base creator. I think we pulled that directly from his bio. Jesse, man, it's good to see you again. Thanks for coming on.
Thanks for having me. Excited to be here. Happy Thursday.
Happy Thursday. Sensational indeed. It's a pleasure to have you. I mean, Base has been in the limelight as always. It ebbs and it flows, and no surprise here. You look like you're somewhere sunny, blue skies, so I hope everything's good in your world, and maybe you can just give us a little bit of a sense of how you're feeling in reaction to everything that has evolved on Base.
Yeah, I'm feeling fired up. I mean, I think what we've seen in the first half of this year is just that crypto is starting to kind of go vertical in terms of its adoption on stablecoins, on tokenization, on trading, on financing. And so I'm heads down basically trying to figure out how to serve all of these customers that are coming online. I spent all day yesterday in San Francisco with a bunch of customers, just kind of hearing what they're solving with Base, and it was pretty inspiring. One in particular customer that I talked to is integrating financing on Base, our kind of borrow and lend markets, where they're doing crypto-backed loans for their customers and also giving yield to other customers. And they were saying, hey, we tried to do this with CeFi, and it was too expensive and too slow. We tried to do it with our own internal systems, and it was too expensive and too much balance sheet capital. And then we found Base, and now we're rolling out a financing product that's instant, that has lower rates than anywhere else in the world, and that is a incredibly seamless consumer experience. And so that to me gets me so fired up, and I think it's indicative of crypto really crossing the chasm, where we now have it powering these use cases behind the scenes in a way that's going vertical.
I absolutely love it. I mean, we are fired up here too, and people are, they're dropping like flies out there. They're going to AI, they're going here, they're going there, but we're not going anywhere, Jesse. We've been live every day for the last 4 years. And so we're not going anywhere. We're going to stick around. But there's a ton that has been happening despite market conditions. One thing I want to ask you about is Robinhood and Robinhood Chain, because I'm curious. We've talked so much about Ethereum at large, and when you see a new chain come on, do you think all right, we got to toughen up, here's more competition, or do you think this is more on-chain activity? There are more people that are going to come on-chain. That ultimately means more user activity for Base. What is your reaction to what's happening over there, and how do you think it could complement or compete with what's happening on Base?
Yeah, I mean, the pie is just growing. We're upgrading the whole global financial system, and seeing other folks come in and say, hey, wow, what Base has been doing for 2.5 years, and the billions of dollars of assets and billions of dollars of volume on Base, that looks pretty good. Let's figure out how to contribute to that effort as well. That gets me excited. I'm also someone who always loves a little bit of competition. I grew up playing sports, played all the way through college as a soccer player, and my attitude was always I just want to be pushed to be the best that I possibly can be. And I think Base is the same, and the builders on Base are the same. And so, I think it's a sign of the times. Every single financial institution in the world is going to bring their business to be powered by crypto rails, because it's going to offer cheaper, faster, more global financial services that let them just offer better customer experiences to their customers all around the world. And so we want Base to be at the center of it. Base is at the center of it today. It's the place where 90% of agentic finance transactions on X402 are happening. It's the second largest financing market in the world for borrow and lend, and growing quicker than any other ecosystem. Every other ecosystem is actually down in terms of TVL since 2025. Base is up 35%. And then the core of our trading business is alive and well, where Bitcoin, Ethereum, they trade more on Base than any other chain in the world from a spot perspective. And so those three products, trading, financing, and payments, are growing incredibly fast. And that's what we're going to keep doubling down on.
And so with that in mind, and I mean, first off, kudos, because, TVL is up, activity's up, haters can say what they want, but you can't argue with the facts and the numbers. And so, there is real live activity happening on Base today, whereas there's a lot of theoretical things happening across the rest of the space. But I want to get a sense of how you're thinking about this as Base moves forward, because we've seen how there's kind of this barbell approach. We've seen RWAs on one side, meme coins on the other side, these two wolves inside of us. We've also seen on Base specifically sort of the iterations through social tokens and creator coins and all kinds of things like this. And the old adage is, if you're everything, you're to everyone, you're going to be nothing. So where is Base positioned? What is the unique differentiation? Where are you guys hyper focusing? What is the facet of the industry that Base wants to dominate?
Yeah, I think the way we think about success for Base is becoming the internet exchange, basically, where every asset, whether it's stocks or crypto majors or commodities or anything else that you can imagine, including these long tail attention assets, is traded. Where you can trade and exchange those assets in every form, whether it's spot or perps or lending or borrowing. You have the right market structure for you, and it's serving as the back end to power financial services products, from Coinbase to new age wallets like Phantom and FOMO, to brokerages that are starting to leverage this technology like eToro and tons of others that are starting to come on chain. And so that is the vision, and I think that's what we're heading towards now. I think the thing that's exciting to me about open blockchains is that you have space for the long tail of builders and innovators to explore new markets, including attention markets, which are kind of like my catch-all for meme coins, creator coins, content coins, that are all basically taking the attention that we spend on culture and on creativity and on feeds and turning it into tokenized value that can then be redistributed through the different constituents who create it, who consume it, and who distribute it. And so you have the space for that. And then on the other side, you have the space for literally every asset in the world that's off-chain today to come on-chain to benefit from 24/7 settlement, global access and deeper liquidity, and better technology primitives that can then be built on top of it to offer different kinds of financial services. And so Base is going to be the exchange where all that happens. And we're actually going to be a programmable exchange where then other people can layer on a bunch of pieces as well. And so, I think it's all going to happen on Base.
And is the infrastructure and user experience, is it generalizable enough? Is it flexible enough where you can build one piece of infrastructure, you can build Base, and it can appeal to the most, suited up institutional of RWA folks, and it can appeal to the, degenerate attention traders?
I think so. I do think that is a little bit of the two wolves. Like you need culture and you need seriousness, and that's the kind of spectrum of conversation that we see on crypto Twitter today. That said, I will say where Base is focused is on delivering long-term value. And so I think attention assets can be long-term valuable for the ecosystem. I think you have memes on Base that have been contributing and growing and onboarding people. I think you're seeing that creator coins, with Ansem and others, I think are going to make a resurgence and be something that also happens. But I think one thing we're a lot less interested in is people who are just here to kind of short-term, make a quick buck and then leave. And so where we're most focused is how do we build systems and products and build the infrastructure that can support trillions of dollars coming into this new economy and give access to billions of people all around to that value, so that they can have more economic freedom. And I think a big part of that is backing long-term builders who are coming through the ups and downs of the market and saying we're going to stay focused on delivering those products, and then also working with kind of upmarket customers that are neo brokerages and neobanks and centralized exchanges who are upgrading their systems in order to offer better experiences to their customers. And so that long-term value and the long-term builders, whether they're big companies or small companies, that's Base's primary focus. And I think it comes through in the quality of different teams that you see on Base. Aerodrome is now one of the largest exchanges in the world. Virtuals and Banker originated on Base, and of course they're going elsewhere, but it's been awesome to see them kind of like thrive and grow and explore there. Venice is, probably one of the biggest consumer apps in crypto today. They just said to announce that they're doing something like $90 million in annualized run rate. They've invented this thing called tokenized inference that now has all of these markets that people are pricing and then consuming inference, all happening on Base with a ton of programmable primitives that are being built on top of it. And so that kind of innovation coming from builders who have been here and are going to keep being here through ups and downs, that's the thing that we care the most about and are going to be supporting the most.
Yeah, there's some Base lifers in the chat. Big shout out to One Arm Bandit, who's a big Base fan here. And then we've got a question from the chat from Greg, who's asking from Edward, that is asking if Base is considering integrating a perps exchange like Lighter.
Yeah, so we think one of the places where there's definitely the most opportunity for growth on Base is around perps. We have perps venues like Avantis that have been growing really nicely on Base, but we think there's a lot more that we can do to kind of get that ecosystem growing even more quickly. And as we talk to traders, and also as we talk to other kind of financial app builders, the lack of a scaled perps venue that is bringing billions of dollars of volume is a missing piece that would let them offer a better product to their customers, let them do a bunch of more kind of hedging and financial engineering on Base directly rather than having to go elsewhere. And so as we're working through the second half of this year, that's a big priority to make sure that we have perps alongside Spot as a really liquid marketplace on Base that can then kind of fill out that full financial services offering.
Yeah, and I do want to just get the biggest of pictures here because Base is so expansive, and you talked about attention markets, and I think it does make sense when you really do think about it, how there is an exchange and a culture that is able to tie these two together. Long-term attention, you want the liquidity and the culture sitting next to some of the largest amounts of liquidity on in the world on the internet, and so internet capital markets, internet finance. Feels like a really good term because ultimately all the capital is wanting to move at this speed, and proximity to some of these markets makes a ton of sense in terms of signal, attention, and then also how that translates into capital markets as a whole. So the last missing, maybe final piece here is AI, and I just want to get a sense of how you see AI integrating into the two wolves, right? The third wolf being AI, the first and the second being the attention markets and more serious RWA products. How does AI fit in?
Yeah, well, we're seeing AI totally change the way that we work on Base. I'm writing code now in between meetings and shipping products internally and externally in a way that I just wasn't able to for 5 years. But as an engineer, I'm now just totally giddy about getting to be able to do that again. And then it's also happening directly on Base. I said it at the beginning, but I think something like 90% of X402, which are kind of agentic HTTP transactions, are happening and being processed on Base today. The things people and agents are buying are inference. They're buying data. They're buying consumer goods and services, and that's growing pretty consistently, where basically it's getting integrated into more harnesses. You have more suppliers who are offering services. Lately we've seen AWS turn it on for their web application firewall, so now any AWS customer can basically just enable monetization directly in CloudFront. So as they have data and content that they want to be selling that's currently being overrun by bots, they can turn that into actually a revenue stream. And so I think that it's been cool to see that kind of primordial soup of AI plus crypto innovation start to develop on Base. I talked about tokenized inference earlier, and I think all of it's going to come together over the next few years to basically make Base a place where you have millions or billions of economic actors in the forms of agents who are doing payments, who are trading, who are accessing lines of credit and capital, and are doing things that we maybe can't even comprehend right now as an industry. And so I think we're in day one of that transition, and it's going to get a lot bigger in the years ahead.
Yeah, and you guys have assembled a fantastic team at Base. Some more questions here. People are curious They saw some things with Kobe, who recently joined the team, but then his base tag on Twitter or something got revoked. Can you confirm or deny, is Kobe still part of the base team there at Coinbase?
Yeah, I just walked out of a call with with Kobe, who was weighing in on base, where we're going, how we succeed and win. Him and I have gotten to work really closely over the last year. I was a core part of kind of championing him joining in the first place, and the big reason why was I've just found him to be an incredibly incisive and visionary leader, and so it's been awesome to get to have him weighing in on base and helping us build base into the best possible thing it can be.
That's fantastic. And do you, just out of my own curiosity, do you find you guys kind of agreeing on most things as far as the direction of base? Maybe you can just give us a sense of, what are some commonalities? And then are there any areas, given that both of you guys are OGs, are there areas where you disagree on the path forward?
I think one of the things that I love most about working with Kobe is that he's just incredibly direct, and we get to have really clear conversations about where we think we're going. One of the places where he's influenced me, and I think influenced base, is on the trading side. I'm historically, I haven't been a trader. I've been much more of an investor, buy and hold. And Kobe is someone who I think kind of grew up trading in the trenches of crypto for the last decade. And so that's helped him, I think, really be a really strong voice for me of that trader as I'm starting to spend time with a lot more customers. And so as we're thinking about perps, as we're thinking about growing our spot markets, as we're thinking about attention assets, I think he's been just a really powerful perspective to make sure that we are prioritizing the foundations, the products that serve traders, to make sure that they're getting a best-in-class experience on base. And so I'd say that's a place where he's really influenced me. I'd say one of the places where me and him have a lot of commonality is just our perspective on the long term. We've both now been here building for a decade plus, and I think both of us feel like there can at times be so much noise, and really the thing that matters is putting our heads down and trying to change the world. And the way we do that is by upgrading the financial system, which is going to let us increase economic freedom globally. And so that mission, and then just the relentless forward progress attitude of we're going to show up every single day. He's sometimes showing up in the middle of the night. I'm sometimes showing up in the middle of the night because we're in different time zones at various times, and we're just going to show up for each other and for Base and for Coinbase and for crypto, because we believe that crypto is an incredibly powerful tool for freedom, and that hard work is going to be what brings it to millions of people, billions of people all around the world.
I mean, I think it's an extremely virtuous, and noble effort. Increasing economic freedom globally, I think, is something that is true to the ethos of and philosophy of this industry as a whole. It's where we've been, and it's indicative of you guys being in the space so long. But many who have been in the space so long have kind of lost their way, and sometimes forget some of the original ethos. Banking the unbanked is kind of the one that comes to mind, but obviously that has gone through iterations itself. In economic freedom globally, I think is huge. A piece of that is economic freedom here in the U.S. and I'd be remiss not to ask you about Clarity Act. It's the Clarity week. It's a big week. I think prediction markets have this at 15 to 18% these days. But actually, we had Haseeb on just before you, and he mentioned that Kalshi has a prediction market about it going into 2027, 2028. It's actually increased odds of happening later in later years. How important is it to get Clarity Act through? I mean, another coworker of yours is Brian Armstrong. He's just been relentlessly in DC trying to help this thing move forward. Maybe, you can give us some insights into discussions you've had with Brian and his experience in DC, and also your perspective on the relevancy of Clarity Act.
I mean, I think as we talk to builders, one of the most pernicious realities of the last decade has been that it's just way too hard to build in crypto in the United States. And that means that builders are spending more money on lawyers than they are on engineering and product. And that's kind of like an untenable reality for being the place where this innovation happens in the future. And so I think from an importance perspective, it's super important. We need clear rules for entrepreneurs in the United States to innovate with the most important technology for financial freedom that we've ever had as a world. And so I am like 100% behind that. And I think that that's not just me. I think it's Americans around the world who are getting behind it. You have an increasingly loud set of constituents from Stand With Crypto to just everyday people who hold crypto that want to see the benefits of it be more widely adopted, and Clarity can provide that. In terms of kind of where Clarity is right now, I think one of the things that's been most exciting for me is just the bipartisan nature of it. You've had, as it passed out of the committees, bipartisan support, which I think has made the bill better. I think as we're in the kind of final negotiations, there's people sitting down from both sides of the aisle to get this bill done. And I'm seeing just a lot of energy and support for making it happen. And so I'm optimistic. It's always a little bit of a, work in progress as you're trying to get through a major piece of legislation through both chambers of Congress, but we have the best people in the world working on it from both sides of the aisle, from companies and individuals like Coinbase and others who are flying into DC, who are putting in the nights and weekends, and I'm optimistic that it'll get done.
Yeah, this industry has been relentless. From your perspective, I'm just curious, one follow-up there is that, mission of improving economic freedom globally. This Clarity Act has kind of been touted as like opening the institutional floodgates, institutional being the key word there. And a big part of, the mission at base and your mission personally, opening up economic freedom. How do you square that, opening up the institutional floodgates? Is that really what Clarity is about? And if so, how does that help achieve the mission of improving economic freedom all over the world?
Yeah, well, I think what we saw with the Genius Act, which was the stablecoin bill that passed about a year and a half, was that it created certainty around stablecoins for businesses in the United States and beyond to more aggressively embrace them. And I think that that's led to, or been one of the contributing factors behind this real inflection that we've seen, where you just have really, really dramatic growth happening month over month, quarter over quarter on stablecoins. And I think that Clarity has the potential to do the same thing for the rest of the crypto ecosystem, where it really creates that regulatory framework for tokens, for protocols, it protects developers, and really makes it so that businesses of all kinds can more seriously, I think, lean in. And some of that's going to be like literally the law is changing, but I think some of it's also just like a message from the United States government that says like, we're here to support this innovation, which then kind of ripples through boardrooms and CEO conversations and lower level employees to all the way to the people on the ground who figure out, okay, how do we take this technology and make it something that can transform our business from payments to trading to agents to whatever it is. And so I'd say, I'm optimistic that Clarity is going to pass and that it's going to lead to a bunch more adoption in businesses. And then that adoption is actually going to contribute to this increase in economic freedom. Because like we've seen with stablecoins, the more people that support stablecoins, the more opportunities and products are available to people who are using stablecoins. And today, I think there's something like 500 million people around the world who hold stablecoins. And so if we can just keep giving them things to do with that, that's going to lead to more access to credit, more access to equities of all kinds from all markets, easier payments that are faster and cheaper, so you're not paying $40 or whatever it is to send a remittance to your family in a different country. And I'm just like so bullish on that leading to more economic freedom. And look, if something happens with Clarity, it's not going to stop. It will be an accelerant, but this is inevitable. Just like the internet, crypto is a technology that is out of Pandora's box, where it is freedom technology for money that lets us take legacy systems that are 50 years old or 100 years old sometimes and turn them into modern software-defined decentralized systems that give more people access, make our money more efficient, and make it so that the products that we use and sometimes hate today just work a lot better. And so when you have a technology that's that powerful, and you have a technology that really can transform the consumer and business realities as people use money, we could not have Clarity for years, and it will still lead to the transformation that all of us are working towards. And so I'm bullish on passing Clarity. I think we're going to do it. I think it will lead to this wave of adoption, and this technology is going to lead to adoption regardless.
I love everything you're saying, Jesse. I think it makes a ton of sense. And I love how it all ties into the bigger picture. I realize we're probably tight on time, but I'd be remiss if I didn't ask you one last thing, which is we were in Vermont for base camp. This was a little while ago, maybe last year, I think, around this time. And you announced that there would be a base token. And I'd love an update on like, are we going to see it sometime soon? What's the status? Are we still going to have a base token? Just anything you can share on this regard would be awesome.
Yeah, well, last September we announced that we were starting to explore a token, which was a shift from where we were previously. We were basically, for the first 2.5 years, we said, we're not even going to think about this. We just want to focus on building a product. And so we shifted that perspective, and we always build in the open. So we wanted to communicate to folks. We're starting to explore, obviously when you have a big scale network like Base and you're doing inside of a big public company, when we explore things, we do it super intentionally. And so I don't have an immediate update to share right now, but I will say that our goal with Base from the beginning has been to be a decentralized global network. We want to build the blockchain for global finance that businesses and consumers and everyday people can use regardless of where they're from, regardless of where they're born, regardless of what phone they have, from every country in the world. And the only way you can do that is through decentralization. And so we're heads down focused on delivering that alongside making sure that the product that we have across trading, payments, financing, agents is delivering value to our customers, big and small. And as we have more updates, we'll share them.
Beautiful. Jesse, we love you, man. You rock. The industry is behind you, and we are very excited for more great things coming out of Base. Thanks so much for coming on, man.
Yeah, appreciate it. Have a great day.
See you again soon. All right, guys, we're going to keep rocking and rolling. We have our next guest getting ready in the back. Jesse, as always, is fantastic. Edward, yeah, I hear you. I see you there in the chat. We're going to bring Olivia, head of tokenization at Ava Labs, up very soon. As always, I mean, Jesse's the man. You heard him talk about Coinbase, Kobe, and working together with him. So very fun times. Getting a word from my producer in the back. I think Olivia is going to be ready any moment now. As always, I mean, shout out to our partners and shout out to everyone in the chat. Edward,
W's in the chat.
Give me some W's in the chat. You guys wouldn't be possible without you. All of our partners and all of our friends in the chat. You guys are what makes this happen. We are going to get Olivia Vande Woude up on the show very soon. She is the head of tokenization at Ava Labs. And it's a big week. It's Clarity Week. So we're going to be hearing a little bit more about Clarity, a little bit more about how the tokenization front is going in the Avalanche ecosystem. And as always, we always learn so much when Olivia's on the show. Let's go ahead. I think she's ready there in the back. So let's go ahead, bring her up on the show. There she is. Olivia, welcome.
Hey,
welcome back.
Thank you so much for having me back. Great to see you.
Absolutely. I feel like it was just yesterday. We were in Bermuda. We were hanging out.
On island time.
On island time. And we were chatting tokenization.
Yeah, happy to be back.
What's new? I mean, Clarity is right in front of us. What have you guys been up to at Avalanche?
Yeah, definitely. Well, I would say, first of all, I mean, obviously the buzz is around Clarity Act this week. Seems at this point pretty unlikely to pass in 2026, in my opinion, but I'm really optimistic, nevertheless, around the direction of travel for the space. And, I would say that and reinforce that the legislative timing issue here really isn't a verdict on the underlying market. And just, to illustrate that further within the Avalanche ecosystem, we've seen continued building by a variety of institutions, enterprises, or otherwise. I think the most recent example that really illustrates this is Denari's launch earlier this month and making tokenized U.S. equities infrastructure available to both eligible U.S. investors and the institutions that serve them. And again, for those who may be less familiar, Denari's D shares are backed 1-for-1 by shares in qualified custody. They preserve the NBBO execution, voting rights, dividends, and corporate actions, and are disclosed as securities that are subject to federal U.S. securities laws. And so very excited to see continued progress on that front. And they're, opening up to U.S. investors. We've seen Broadridge launch an L1 related to on-chain proxy voting. We've seen even more recently some work with Hyundai that was very exciting in terms of treasury operations. And in that instance, Hyundai Card and Hyundai Motor actually did a live stablecoin powered treasury transfer between their US and Mexico subsidiaries via Avalanche. So all that's to say, despite the potential holdup with the Clarity Act and whether it passes in 2026, we're still seeing a lot of enthusiasm and energy from builders in our ecosystem.
Fantastic. I mean, that is a great update as far as what we've seen as of late. And you're right, Clarity's looking unlikely, but there's still a ton happening here. I want to talk about the Hyundai stablecoin transfer, because this is a major company, but doesn't have anything to do with crypto. And so it's very cool to see them getting into the stablecoin game and just using it for the benefit of making cheaper, better, faster technology and ultimately improving their bottom line. Can you just talk us through how that deal came together? What is it like building a relationship with, this multinational, conglomerate car company? And what does it take working through the education process to ultimately get them to conduct this stablecoin transfer?
Yeah, well, would say that it's been definitely a joint effort on the business development team at Avalabs, just especially given Hyundai's operating across so many jurisdictions. So our head of Asia, Justin Kim, and team, as well as Morgan Krupetsky, who leads our on-chain finance team, were really instrumental in making this happen. And just for viewers, what was announced early in July or last month was that Hyundai Card had completed its first stablecoin remittance POC with both Tether and on Avalanche. And so in that instance, it was a conversion of $20,000 into USDT that was then sent to a Mexico affiliate. And what's really, once again, we are very focused on technology built for business. And we really strongly believe that in working with our partners, we're focused on business outcomes as opposed to the minutia of whatever tech is underlying and powering that business outcome. And so in this instance, Hyundai Card and the relevant parties were not so much interested in the fact that it was a stablecoin based, cross-border remittance with Tether, but really focused on the cheaper fees and also, less time that it took to initiate this transfer. So just for context, the entire process took about 7 minutes, and that's in stark contrast with traditional interbank transfers that take as much as 3 to 4 hours or longer.
Yeah. Can you tell us what you think this could grow into? I mean, you mentioned $20,000. It took 7 minutes. They're operating at a scale of multiple nations, multiple jurisdictions.
Right.
Millions, if not billions, and more dollars at stake here.
Yeah.
When you think about this and you think through it and you scale this out, what is the end game here? What does this ultimately look like and turn into?
Yeah, absolutely. I mean, you could view the surface area really is the multiple Hyundai Motors overseas entities. So very exciting to see the possibility of this POC scaling and again meeting the real tangible intercompany settlement needs that they have, as opposed to being just a POC or experiment. And so the hope is that this would scale further. But the exciting part about this POC is that there will be a second, you could call it stablecoin POC or chapter, in which Visa and Circle will participate. And so that's due to start, or has started actually at the end of July and early August. So more to come on that front.
Very cool. Switching gears a little bit, you mentioned Denari. We're friends with Denari as well. They've been a great equity. They've been a great partner to our show. They power our daily equity segment here, and so we've been talking quite a bit about equities a little bit more on the show, just as these market conditions evolve. And we had Gabe on the show the other day, and he was kind of talking through how they've been able to tokenize the entire S&P. I'm just curious from your perspective, how do you and Avalanche work with Denari, and what is the core innovation here? How have they been able to achieve this level of product market integration in the tokenized equities world?
Absolutely. I mean, Denari's been a great partner, have always respected their very compliance first approach, in that they have really been designing inside what the US rules already look like. And as we alluded to earlier, they announced, really the first of its kind and at scale instance where tokenized U.S. equities have been available, at scale to eligible U.S. investors and also the institutions that work with them. And so very excited to see that launch. And, that's all been made possible by their decision on day one to work closely with regulators to secure a broker-dealer license, to have the requisite licenses, again, to operate within the existing framework, within the U.S. and securities laws. And I think that, it's become even more clear now with questions around whether clarity will pass or not pass. And, I think that the winners like Denari have really chosen the compliance first approach that works, with the SEC and also is, already compliant within the existing rules today.
Yeah. Fantastic. It is Clarity Week. And so I would have anticipated that something like a Denari, where we're tokenizing all of these equities, we know that they're securities, but we go ahead, we tokenize them anyway, we bring them on chain, wouldn't have been possible if it wasn't for the Clarity Act. But nevertheless, we're here. The thing is live online. And so how important is the Clarity Act? We talked at the beginning of the show how it's maybe looking like it's probably not going to pass. But is that really relevant at this time, or do we kind of have signal from the regulators anyway, as far as what we can and can't do?
Yeah, I mean, I would argue that clarity doesn't add clarity. It really just makes the clarity permanent. And what I mean by that is that we already have quite a few, working rules for tokenized assets specifically, such as those from Denari. They didn't, come from Congress. They came from the regulators. I think the March 17th guidance, joint guidance between the SEC and CFTC, really gave a better coordinated framework for when a digital asset is a security. And, unlike ordinary, staff guidance, it bound both agencies, which was pretty critical and a mark of real progress. And, as I think it was A16Z's Chris Dixon had put it, the market has gotten rules for the phones and not the towers. In other words, Genius settled stablecoins while the chains that they run on were left really to agency discretion. And so, an interpretation is still at this point very much an agency product, as we saw with the March 17th interpretation. But what one administration's agencies write, obviously the next can rewrite, and without legislation vote or notice and comment. And so the difficulty now for institutions and builders alike is that they may start a pilot or launch something in production, but it's hard to have the confidence that they can really build a balance sheet on it, given the lack of clarity that's permanent. And so I think all that said, the firms are building regardless. And like I said, Denari's taken a very compliance first approach that irrespective of Clarity Act passing, within 2026, it will, exist within existing U.S., regulations and be able to thrive accordingly. But I would say, Clarity Act for most builders and institutions would be very important for creating the permanent clarity necessary for making 5 or 10-year roadmaps.
Yeah. I've been kind of thinking through and walking through this thesis on this show with, several guests. And I'm just curious to get your take on it, which is that as we tokenize more of these asset classes, now we have equities, we've got stable coins, we're kind of, making our way through the asset classes that are available to tokenize. These things go on chain. Doesn't stop there. Ultimately, we want to do things with these assets on chain. And so they end up landing in DeFi protocols across several chains. These DeFi protocols flourish, their TVL, their total addressable market increases. And, all of these things get re-rated much higher, as well as the underlying blockchains such as Avalanche. More DeFi activity means more chain activity, means, generally more revenue fees for the underlying protocols. Is this a valid way to think about the progression that we're seeing in the industry these days? Do you think, this tokenization, it all starts with tokenization, is kind of downhill from there. Do you think that there's any problems in this thesis? Do we get roadblocked by anything? Where do you think we are on this tokenization journey as a whole? And maybe you can just point to some asset classes that haven't yet been tokenized that, we can start to channel our focus into these asset classes and bring them on chain for the sake of the entire industry.
I mean, I would say stepping back, the thesis from my perspective for the tokenization space's success has really been start with a high quality asset supply where demand or distribution already exists, help to build out that distribution infrastructure, be it through fintechs that may want tokenized US equities from Denari or just basic stablecoin infrastructure. But then I think the layer that's really been important and not yet really filled out has been on the utility side. And I think over the next year, we're certainly working on this, is really building out the convergence of tokenized assets and DeFi. So think more innovative use cases like a retail user potentially being able to borrow against their tokenized stock, or other use cases that again aren't focused on whether something's on chain or off chain, but unlocks new use cases, or would be compelling for a retail user to adopt. And then to your point about the various asset classes that are coming on chain, obviously tokenized money market funds have been frankly just more easy to do. I'm very excited about tokenized private credit and how blockchain can upgrade both distribution mechanisms, but also those processes from the ground up and lead to better efficiencies. I think tokenized real estate has been a tough nut to crack globally, depending on the jurisdiction you're operating within and the laws that you're subject to. But there's we're still very much at day one. We have a long ways to go. And I would also, to add to that in terms of the progression of the space writ large, if Clarity fails, the tokenization efforts aren't going away. Like, they're not just going to die day one. But the U.S. digital asset market, does remain really stuck under a patchwork of agency guidance, more narrow court decisions, and what have been to date non-binding staff statements, as opposed to clear statutory law that I think would really unlock more comfort by institutions and enterprises and end users ultimately to derive more utility from tokenized assets.
Yeah. Makes a ton of sense there, and you're absolutely correct. No matter what happens with Clarity, we're going to continue to accelerate this tokenization movement. Maybe the guidance comes from the SEC or another regulatory body, but nevertheless, this is going to continue to push on. I remember that there's been a mechanism, and I want to hyper focus on equities here just for a moment, because it feels like that's where a lot of the action is. A lot of attention is here. We've been talking about Denari. Also, Robinhood Chain, has gone live and has a unique model for how they're tokenizing some of their equities. And as I understand it, this is a really novel mechanism where, and this was originally, I think, the case on Robinhood, but it sounds like Denari is doing this way as well. I feel like you're the person to ask about this, which is that the best way I can describe it is like just-in-time tokenization, or tokenization on demand. Let's take Robinhood, for example. They've got, they're a broker of a ton of equities, in financial, institutions here. And so my understanding is that someone is submitting an order, and that is when the equity is tokenized. Whereas in previous times, you either had to go directly to the issuer and say, hey, we want to, tokenize your equity from day one, or, you would go through all these, SPV wrappers back and forth to, buy up an inventory and then put them in these SPVs in order to do this. But I think that's not the case with what I'm seeing from Denari and, I think Robinhood as well, is that these guys didn't buy up a ton of equities. They've got market makers and they've got broker dealers. When an order comes through the platform to purchase one of these equities, they signal to that broker, they signal to the market maker, they say, hey, we got this order come in. The market maker broker says, okay, we're going to take this equity. We're going to keep it where it is, but we're going to tokenize it on demand and serve that tokenized version directly to the customer that submitted the order. So it's much more capital efficient than buying up a ton of these equities. That would be a real capital bottleneck. And instead, we can just go directly to the people that already own these things, like the brokers, and say, hey, we got an order. We want you to tokenize this. And you can serve it based on whatever you want to quote to the end customer. And that's the quote that, the platform shows to the end user. That is what they submit the order on. Is this the right mental model? Is this the right way to think about this mechanism? And if so, how did we not solve this before? Why was it always like native issuance or SPV wrappers? Why did we not think of this until now?
I think that's a great mental model, and your framing of just-in-time tokenization makes sense. I think Denari themselves have pitched it more as tokenization on demand. But nevertheless, yes, that process, does match what Denari does, in that the order hits traditional markets for real pricing and execution before the token is issued. And the coverage at this point is about 700 stocks or ETFs, including the full S&P 500, as was announced for eligible users. So yes, would say that it is a tokenization on demand model. As I understand it, they, with D shares, they work by submitting the order first, and then the underlying shares acquired, and then a one-to-one back token is minted to a user's wallet. And so you can submit or place an order through Denari's trading app, or through their partner platform, because they've taken a great B2B2C approach of embedding with exchanges, fintechs, and others. And then you can use market or limit orders. The funds would settle in supported stable coins or fiat, depending on the partner interface or given preference. And then Denari would acquire the underlying security. To your point, you would, or as a user, would receive the tokenized equity or a corresponding D share, as they call it. But importantly there, every circulating token is backed by a locked underlying share. And then you can hold it and manage it like a stock. Dividends are paid in stable coins like USDC now. Stock splits and corporate actions are all automatically mirrored. So importantly, in this model, and which is in a contradiction with some of these other what I call wrapper or derivative style approaches to tokenization, you're able to retain as a user the economic rights associated with the underlying security.
Great. And I realize that you're sort of at the head of tokenization, maybe a little bit earlier in the process, after someone, has it in their wallet and they're looking for something that they can do with this equity aside from just holding it in their wallet. Maybe a question for, a DeFi person, but I take it that a lot of the demand of having a tokenized version here is that you can margin it, you can collateralize it, maybe lend it, do things with it. What is Avalanche doing to sort of foster this DeFi ecosystem around the equities asset classes? Or the equities asset class? How what does this look like? Is there any projects or things that we can expect from Avalanche as far as, we get a D share, we want to withdraw it to a chain, maybe we choose Avalanche. What can we do with our tokenized equities, tokenized D shares on Avalanche?
Absolutely. I mean, I think the DeFi functions are wide ranging, and many of which haven't yet to come to fruition. But I think in the context of Denari, what's really exciting is lending and borrowing applications, for example. So you could post D shares as collateral in lending markets to borrow stable coins or other assets, but, in a capital efficient manner, and that you don't have to sell the equity position. And that's very much like what we have in TradFi today with prime brokerage, use cases for stocks as collateral, but in this case, available on chain. I think something that is another interesting use case would be atomic share for share swaps. So you could directly swap one equity position for another in a single transaction, and again, without settlement frictions, without intermediate cash or the multi-step process that would be involved with traditional markets. There are yield strategies and staking opportunities, more in the way of portfolio construction tools. I know Denari's been very focused on direct indexing and automated rebalancing, or some of the more, on-chain portfolios that are sophisticated that mix US stocks and ETFs with crypto assets potentially. And I think down the road, we'll see even more cases around collateralized lending or margin, continuous, 24/7 trading integrations, more automated portfolio management, and a lot more in the way of programmable services. So that's very early innings, and we'll definitely be excited to see the progress there with respect to Denari. But I would also just say, in terms of a DeFi update, we're very excited that Aave's V4 instance has launched on Avalanche as of a few weeks ago. That represents the first instance outside of Ethereum where V4 is being launched. And that's a pretty big architectural overhaul in that it moves the protocol from what were independent, monolithic per-chain liquidity pools, as was seen with V3, to a unified liquidity hub, as it's called, with modular borrow spokes. And so that'll be very exciting in terms of decoupling the deposit risk from borrowing risk, or having long tail or emerging tokenized assets live in isolated spokes that, could potentially absorb first loss bad debt before even touching the main hub buffer. So thereby protecting, the primary depositors. So there's a lot of exciting features that are coming from the V4 launch on Avalanche and this hub and spoke model that's emerged. And one of them that we'll have more to share on probably later this month or next month is a forthcoming RWA hub in the context of the hub and spoke model that V4 offers.
And so you kind of preempted my next question there, which is that, do you anticipate these tokenized equities getting lent out and borrowed on lending borrowing markets like Aave V4? Is that capable of facilitating the lending market for tokenized equities?
Yeah, I think sky's the limit. I think SEC lending is going to really take off over the next few years as well. So it'll be really interesting to see the integration of tokenized equities and this, V4 and hub and spoke model. But there will be so many use cases that we probably haven't thought of that'll come to fruition there.
Oh yeah, we're going to see financial experimentation on the equities asset class. Probably hasn't happened for hundreds of years. We got a question in our chat here from Greg, who says, if I have a stock in my Fidelity account, I don't own it unless I do the official filing. This allows Fidelity to loan my share out. Who gets to loan tokenized stock out?
In the context, well, I guess I can't go back with questions to the comment. But my question would be in the context of Denari. But the question is, can you repeat it again, Robbie?
Yeah, so Greg says, if I have a stock in my Fidelity account, I don't own it unless I do the official filing. That allows Fidelity to loan out my share. If I have a tokenized stock, who gets to loan that out? Who gets to loan out a tokenized stock?
I think it depends on, again, like the venue that you're using this tokenized stock in, and then also like whether the tokenized stock is taking the Denari approach, which has been termed more of like the regulated custodian infrastructure approach, or if it's more of like the legal wrapper approach. And, if it's direct issuer tokenization, like whether there's whitelisting or if there are constraints on transferability for the tokenized stock. But I think the idea here is, what can you do with the tokenized stock? And again, like depends on the venue that you're transacting on. But I'd say in the context of Aave V4, and the initiative to really rebuild securities finance, there will be native support for tokenized equities and RWAs that can really disrupt the $5 trillion almost traditional securities lending market as it stands today. But I'll get back to Greg on that.
Yeah, that still is a terrific insight. And in a similar manner, like let's say we do have a couple of D shares. I want to natively. All right, I want to make an atomic swap from NVIDIA to Tesla. Gabe was making the point from Denari. We had him on the show when they made the announcement that this might not constitute a taxable event, which is, potentially a huge development in how these things are handled. But, regulatorily or technologically, these things I'd imagine are just ERC20 tokens, right? Or maybe they have some NFT metadata or something like that. If we have a tokenized equity, and let's say they're, 2D shares, I want to go back and forth, can I swap them on something like, are we going to see Uniswap or Airdrome pools just get spun up, with tokenized equity liquidity in there where we can swap back and forth?
Yeah, also just to address the first point, I'm not a tax expert, so I can't, answer directly about whether, atomic swap of a D share for a different D share is treated, as a taxable event. But yeah, I think that the applications for tokenized stocks are very interesting in the context of DeFi. I think to your point, be it in the context of Uniswap or Aerodrome pools or otherwise, I think there's a lot to be seen. But where I get really excited is first and foremost with using tokenized stocks for collateral for lending and borrowing. So, deposit tokenized stock XYZ into, a lending protocol, borrow your stables, and again, without having to sell your equity position. That to me represents a few benefits, and that you can potentially keep the upside exposure, but also unlock liquidity. I think, there are countless examples of this with Camino, Morpho, Loopscale, other markets that already are accepting certain tokenized stocks or ETFs as collateral. And, then you can also think about it in the context of institutions. Like funds could potentially post large equity positions for on-chain credit. I think in the context of liquidity provisioning, that's really interesting, kind of to your point earlier, seeing a world where you could supply tokenized stocks or stable coins to AMMs and then, earn trading fees. I think that'll be very interesting. I think in the context of yield generation or structured products, like it'll be very compelling for end users to lend tokenized stocks to earn interest, or deposit into vaults, or strategies that combine equity exposure with yields. So there's a lot to be seen. I mean, we haven't even scratched the surface of programmable portfolios or automated strategies, but there's a lot to be seen for the number of applications, for D shares or other forms of tokenized stocks.
Yeah, once we get agents as financial advisors, things are going to get very fun. I mean, this is exactly where we're headed, and the whole buy some stocks, monetize them, borrow against them. You don't have to pay capital gains because you don't sell, you just borrow against. This has been something that I think it's a tax strategy that rich people have used for a long time, but everyone else has kind of been siloed out of it. Man, I wish I could put some roll-up equity, tokenize it, take from equity from the roll-up and borrow against that. That would be a tremendous tax advantage.
We can take that up offline, Robbie. I'm just kidding. But I think here, just stepping back once again, tokenized stocks offer a number of advantages over traditional brokerage or standard brokerage accounts. You can think about tokenized stocks and DeFi as enabling a retail user to retain ownership rights or the economic exposure, but while also making that asset more productive and borrowing against it, earning fees, rebalancing, atomically, whatever it may be, and also accessible 24/7 and globally. And that's, again, capabilities that are difficult or sometimes impossible inside of a standard brokerage account, or where many are edged out by not having private banking capabilities.
It feels like this is a sector of the industry that's about to explode as we tokenize more and more of these assets, and you're ahead of it, as you always are. So thank you so much for sharing, helping us understand this, wrap our head around it, and for coming on again. We'd love to have you on again soon. Sounds like you guys have some things coming out the end of this month. We'll have you back, and I think we might be up there in New York for the Avalanche Summit. So we'll see you soon.
We'll look forward to seeing you. Thanks, Robbie.
Absolutely. We'll see you again next time. Thanks. All right. The show goes on. Guys, we have our final guest that is going to be joining us for another segment here very soon. It is Santiago Santos. And boy, what a doozy of a stream. I mean, I think we've been going for about 3 hours here. 3 hours with some of the best in the business. Some people here have just been doing fantastic, guys. We've got Santiago Santos, the founder of Inversion. He's been around the block a couple of times. Very curious to hear his market takes. And just guys, give it up for the guest lineup today. Jesse Pollak of Base. Olivia, the head of tokenization at Avalanche, Haseeb of Dragonfly Capital, and then the head of legal, Katherine Kirkpatrick from Chainlink. Rockstar lineup today, and we are getting ready for our grand finale. Santiago Santos, I see he's ready there in the back now, so we're going to go ahead and bring him up, and we're going to take us through the finish line here. Santi, it's good to see you again, man. Thanks for coming.
Robbie, how's it going?
Good. I don't remember the last time we got to chat, but I think it was relatively recently, maybe at a conference. Feels like market is apathetic, but underneath the surface, there is so much happening.
You know what it is in bear markets? There's a lot of development. It doesn't go unnoticed. It's like oftentimes headlines that would happen in a bull market that are happening in a bear market would like lead to a market rally. But you're right. There is a lot of apathy. Feels like AI, robotics, and anything hardware related is sucking the air out of capital markets. And it's a tough environment to be a crypto investor out there. Maybe not so much a builder because there's a lot of really good stuff happening, most of which you've covered here. Do a great job doing it. But yes.
Thank you, man. Well, let's talk about it. It does feel like we've gotten a slew of negative headlines as of late, but the market hasn't reacted. Before that, we got positive headlines and the market still went down. And so it feels like we're kind of, before we go up, we have to not go down, right? And that's kind of where we are right now. We're kind of holding the line. And so I guess, do you feel as if, we're kind of forming what seems to be a more solid foundation for like the next cycle? It does, as you mentioned, hardware, AI is kind of sucking the liquidity and the volatility out of the room. People have been saying that we needed this rotation, out of equities, out of AI, ultimately into crypto for us to rally. What are the catalysts? Like, what are you monitoring? What are you watching that ultimately is going to pave the way here?
Yeah, it's like simultaneously, it's all priced in and none of it is priced in. So the question is like, what does it mean to be in crypto today? I think is a definition that means a lot of things to many people. I think the role as an investor is to say, okay, what does the world look like in 18, 24 months, 36 months, 3 to 5 years out? You're already seeing signs of that today. Cloudflare coming out saying agentic payments is going to be big. And they put their weight behind that. They acqui-hired a team from Syndicate. Roel, go out and check his profile. What they did is pretty monumental. Again, this is what I'm talking about. This type of headline in a bull market would have led to a systematic rally across anything that remotely touches stablecoins, right? My point more broadly here is what does it mean to be in crypto today is very different than what it was 3 years ago, where you were talking about NFTs and gaming. Today, it's stablecoins, it's fintech. Let's just call it that. This divide between crypto and fintech is going away, and you're already seeing that in some of the biggest rounds, like Rain working with Western Union to power their debit cards for a 50 million user base. Again, a headline that in a bull market would definitely not go, unnoticed. So I think crypto captures so many different things, and we've had many different experiments along the way, but there's a pocket of crypto that is working. It's working in a very material way. It's just not, it's the bull market, but maybe not the one that you wanted that aligns with your bags. And that is, I think, the realization that many investors are coming to terms with, which is let's just get behind what is really working in crypto and focus on that, because there's a lot of really good stuff happening in tokenization and stablecoin land.
Yeah, tokenization, stablecoins, fintech more broadly. We'll get into all of this, but am I right? You pretty much called this. You said tokens were going to go down, but adoption was going to go way up, and the biggest benefactors of this technology would be the maybe public companies or more traditional incumbents that would adopt the technology, not really the disruptors and innovators with the live tokens.
That's absolutely right. I was on the record, November, October of last year saying, look, we will likely see a redo of what happened with the internet, where you saw the NASDAQ collapse 80% and then internet users grew 15 times. And then the NASDAQ took 10 years to recover. We're seeing that play out in real time. What is important now is what you just said, that last part, I don't think is consensus. What was not consensus, typically what you hear in venture is first mover advantages are very real. You have moats, you have network effects. And I was like, wait a minute, guys, this is the open source networks. And by the way, you codify certain architectural choices like Ethereum did that are hard to undo, if you will. I think the clearest, so that's definitely manifesting. Tokens are down in a very meaningful way. And look, there could be a number of reasons why that's the case. The more important stat here is Robinhood has launched a chain. Robinhood has many users. Obviously, everyone knows it. It's TradFi, but it's a type of user that likes crypto, which is speculation and that energy, like people are trading options. They're the type of people who want to trade coins. Robinhood launches a chain on Arbitrum. They are capturing 90% of the fee revenue. Arbitrum is capturing the other 9%, and Ethereum, the L1, is capturing 1%. That is not the network effects that we were promised. That is not the first mover advantages that we're promising. And that has always been my position since last year, which is, as an investor, you have to understand you can both love the technology and hate the price of the stock or the token. And crypto is, I guess there's a lot of reasons to be excited about crypto. There's phenomenal technology. And the testament of that is Robinhood, a $50 billion plus organization, launched a chain to offer a great product to users. And you go talk to those users, they're liking and enjoying coming on chain. So all the things that we celebrated and wanted to build in crypto are simultaneously happening in real time. So there's no reason to be upset. I mean, maybe you're upset because you held ETH and it's down, 60%. That's a different story. But we're here to celebrate the technology and the fact that some of the largest organizations, BlackRock, Visa, Cloudflare, Robinhood, are all entering the space in a very meaningful way.
Yeah. And so I happen to be looking at the Robinhood stock ticker chart because, just to kind of validate this thesis, it's like, well, they would be the perfect example of this. They adopted the technology. They don't have a live token, but they are public. We can check the price. And I think they're up since they launched the chain. Kind of sideways.
The stock has been sideways. Put it this way: Robinhood has 12 different business units that are each generating $100 million each. There are very few organizations that can pull that off. Coincidentally, Coinbase also has that. But Robinhood is super interesting because I felt that it is a founder-led organization, and Vlad and the team really understand retail. And crypto is a big part of crypto is retail. And I think it's definitely a company to follow and study because it puts pressure on so many of the other fintechs out there to develop a crypto strategy. Said differently, we're no longer in a state of the world where boards and people are saying crypto's a scam. Like put it that way. Like sometimes we sit here and talk about why the token is up or down, where all it takes is go back 2, 3, 5 years ago, and all of the things that we wish would have happened. And we're complaining about certain things. And this is why I started Inversion, because I want to build and will into existence things that I want to. There's a lot of things that we can do to make crypto and continue to build on the promise of crypto. But a lot of that also requires adapting to the things that are working and the things that candidly are not working. And that's okay too,
Yeah. So let's get an update on Inversion. Quick disclosure, the Rollup is an investor in Inversion. We're a proud angel.
Thank you, guys. We appreciate
Santi.
your support.
Thank you.
Yes.
One of our angel companies that is still surviving and alive. So shout out to you guys. And so where are we at? How's Inversion going? And just love a general update. We'll get into some of the nuts and bolts.
Yeah, been public about it. We did a major pivot a couple weeks ago, and I sent this letter out to all of our investors, and I've talked about it publicly. We, as a group, have done the most amount of work to understand where crypto fits in to a wide variety of sectors. The conclusion out of all this exercise is crypto as a piece of technology is very useful. So stablecoins are very useful to most businesses for the simple reason that they're all interacting and doing cross-border. And you would have heard me say that time and time again. I still hold to that. The insight that we've had is implementing crypto is not sufficient in the way that it doesn't release as much value. And so the strategy of Inversion, for context for folks, was let's go buy businesses where we think crypto can fit in, but also release a lot of value. Because as an investor, you have to understand, okay, if we're going to buy this company for X price, we want to make sure that the things that we're doing as a rightful owner are producing value. And that led us down a path of looking at businesses that were not so great, but where crypto could really fit into that. So put an example, remittance companies. So we looked at a lot of remittance companies, and we came out of that actually quite bearish. And I flipped my mind and said, gosh, this is not a business that I'd want to own. And stablecoins can probably do a lot of stuff here that could be impactful for the business, but it's not a good business. And so as simple as it sounds, the insight that I had, and perhaps the mistake that I did, was just overfitting the type of business that I want to buy to where does crypto really fit in? And this is not to say that crypto's dead. This is not to say that crypto's not going to be used in our companies that we acquire. It's more of a, let's go first and foremost by good businesses that are going to compound, that are going to continue to produce value, that are AI resistant, that are good, durable businesses, and then figure out a strategy to build value. But I'll tell you, Robbie, it is very hard for us to overlook the amazing stuff that we as an organization have been able to do with AI.
Yeah.
I mean, give you an example, we're a team of 4. I would have needed a team 2 or 3 or 4 times the size to cover maybe as much ground as we're covering today. Like the ability to source and cold call and really enrich context for companies and due diligence unparalleled. I mean, I come from a world where you used to have an army of analysts and associates and an assembly line to cold. I don't know. I mean, you guys are pretty AI native, right? It is truly remarkable. And so we look at that and we're sitting there and saying, gosh, there's this whole part of what we're doing in our organization that has allowed us to be way more efficient, more capital efficient. And we definitely need to pay attention to that. So I continue to believe this is the most exciting time to go out and look at businesses where they haven't been really forward with technology. And by the way, like this is a tale as old as time. Small and medium businesses of all kind are always slower to adopt technology versus smaller, scrappy organizations. That has always opened an opportunity to go and partner with these businesses and just build value and allow them to use technology. So incredibly excited. I think this is a generational opportunity to go about build. I tell my team, we can build massive businesses on the back of acquiring smaller organizations, bring them under one hood, and just make them way more efficient. Give an example, what takes 80 hours to produce might now take 2 hours, and you're still billing the exact same amount to the end customer. Similar to what we hear in crypto, you have a massive opportunity to increase throughput and lower costs in most industries out there. And it's incredibly exciting.
I saw a tweet the other day that said, we need a bending spoons for crypto.
There you go.
And obviously anyone who's unfamiliar, like Bending Spoons is effectively private equity acquisition company that's bought up. I think they recently bought up Airtable and just put this all under one roof. They verticalized the whole thing, put, a ton of, he's there. You got the dog on the show.
He's a mascot. He's a bit restless because.
And so, yeah, I mean, that's similar to what you're talking about. You're kind of saying we need a Bending Spoons that's going to go out there into the real, not crypto world, but that take this technology and advocate for it, champion with it. Is that similar to the strategy here? And just generally, how are you thinking about ultimately transitioning from the discovery and research phase, staying patient, but ultimately making the decision and executing an acquisition?
Great thing. So Bending Spoon, similar to us, is a holding company. And I think that is the preferred structure. Because to your point, we can be patient. And my first and only duty is to protect capital and allocate it in a way that will compound and outperform. And if I don't feel that I can outperform, then stay disciplined, don't deploy. When you're in a fund structure, different story. You have 5 years to deploy, 5 years to produce value. So insight number one, I think we got the structure right. But Bending Spoons is what they're doing is, group of young tech forward guys from Italy, out of all places, deciding to buy Silicon Valley startups that, for better or for worse, just have raised a bunch of money over the last 10 years. I was an investor in Airtable, for instance. And I mean, companies growing, 20% ARR year over year. It just tells you the bar is much higher now to build enduring businesses. So it's kind of remarkable. We're sitting here looking at Anthropic, go from 0 to 5 to 10 to 15 to probably close to 100 billion in ARR. There is no business in the history of mankind that has done that in the time that they've done it. Like Salesforce, 20 years in, is at 50 billion of ARR.
Yeah.
It is crazy. But there's other businesses, even tech forward businesses, that are still trying to figure out a way to really get on the AI train. Mm-hmm. So yeah, pretty remarkable. What those guys are doing is they're really consolidating a bunch of these businesses. Like they bought Evernote. They, if you look at their S1, it's a public company now. From my estimation, they've, reduced a lot of the back office people and really streamlined it under one roof. It's kind of like the Elon Musk playbook, right? When he bought Twitter, now X, he basically, it's like this idea of like an organization for whatever reason eventually becomes bloated. And there's two things that are really true in legacy businesses. They eventually become bloated, unintentionally or intentionally, and they don't price correctly. And bending spoons, I think those are the two insights of these guys. It's like we can probably continue to run these businesses with a fraction of the staff, and prices can go up, and you're going to lose some customers, but the net impact of that is that you grow revenue quite a bit. There's another private equity fund that quite literally all they do is they go in to buy the business and then increase price 2x, and they'll lose like 10% of the customers, but they do the math around how much of the customers are we going to lose. And again, as founders, chronically underprice their product. Because you get started, you offer freemium, and these are some of this goes back to like, there's certain core principles that we have in Inversion, and this is one of them. Like, founders never have time to figure out how technology fits into their business because they're running their day-to-day. Founders typically underprice their product. Founders typically think that they need to have a larger organization because it feels more secure to have more people around the table. We've gotten extremely comfortable at Inversion, to tell you the truth, to be running this company counter to what most people would say is like, you've raised a round, go hire a bunch of people. We're a team of 3. A lot of that is possible today with AI. So where we focus on when we go talk to business owners is, look, I'm not asking you to believe that AI is great. I'm just telling you to look into my business and figure out how I'm running it. And I'm telling you, you can do a lot of the same. But to tell you the truth, Robbie, like, I think the core insight that is top of mind for me is technology comes in and changes a lot of things, but it doesn't change human behavior. And I think that is important to understand, because I develop a lot of my investment ideas thinking about what changes and what doesn't change. And also culturally, Robbie, you guys are probably a small team. You can implement technology from one day to the other. If you're a team of a much larger team, culturally, it's slower, it's more difficult. And a lot of times, biting the bullet is really hard. Some people just don't want to do it because the status quo is more comfortable. So that's the kind of culture that we have in Inversion, which is, let's be respectful, let's partner with great operators that have built really good businesses, but they are aligned to make this change. And that's kind of like, numbers on a spreadsheet tell you one thing, but culturally being aligned and making this change requires a certain DNA that not everyone has.
The part of what you just said that I want to focus on is the consumer behavior. The behavior doesn't change. Technology, comes in, it adapts some things, adapts some business practices, but behavior doesn't change. With a technology that feels so transformative like AI, what do you think are some of the behavioral characteristics of people, consumers, founders that are not going to change? Just, they're going to remain constant. There's going to be through lines despite AI and how impactful it is.
A lot of the founders that I backed, and many of them will tell me, yeah, I know there's like 5 or 6 or 10 people in my team that are just not performing, but I really don't want to, I feel like, it's hard. I don't want to let go of them. And I'm like, you owe it to you, yourself, them, and the rest of the team to make that change as quickly as possible. And it's, I think, a hallmark of someone once told me who knew Mark Zuckerberg early on and was one of the first investors in Facebook. And he said something to me that's always stuck, which is, Mark was very good at hiring, but he was better at firing. And I think there's this fear of like, it's very stressful. I've had to do it, but you have to just you have to bite the bullet. You have to chew glass. And I feel like, so there's always this innovator's dilemma. It's a great book, Clay Christensen at HBS. Go read it. Because I think there's always complacency, human behavior, like you're lazy by default. And that's not a bad thing. You prefer the status quo. Like, if it ain't broke, don't fix it. But then there's the common adage, which is like, a frog in a boiling pan. The temperature keeps rising, and one day to the other, you just you're fried. And I think we're living in interesting times where the back in the day, like in the 1980s, like the S&P was mostly industrial companies. It took 20 years for it to mostly be technology businesses. Up until like the early 2000s, it kind of gradually changed to technology. And then from 2000 to 2010, 2020, it is now mostly technology, right? Like NVIDIA is worth more than all the steel mill companies, car companies combined. You know what I mean? Like Tesla is worth more than all the car manufacturers combined, even though it's a car company, but it's technology forward. And I think that the pace of creative destruction is going higher and higher. And part of the reason is that we're getting better at innovating, but we're also, I think, simultaneously humans are slow to adapt and slow to change. I mean, you've all seen the charts, the penetration. I mean, God damn it, there are companies that are still running on fax spreadsheets. And we're here talking about how AI will disrupt the CRM and the Excel. I'm like, hold on a minute. Like, there are still businesses out there that do pen and paper, and that's just human psychology and behavior, right? There's a part of a generational thing. Like, there are business owners that are much older and less at the frontier. And so I think that always will allow for opportunities to buy these businesses. Second also is, when we think about crypto, just to bring it back a little bit to what we're doing here, is crypto touches money. Money is one of those things that we all think about because it is important for our needs, but we don't want to think about it in the way that crypto requires you to, which is, Robbie, you don't wake up one day to the other and say, I'm going to change bank accounts. Like, you're happy with JP Morgan or Bank of America or, whatever. But crypto touches money in a very in-your-face kind of way. And so crypto, unlike AI and other technology, my belief is that it is a bit harder for people to adopt and get behind because it is so front and center with money. And people don't like to think about it.
Yeah.
You want the convenience of someone. So the insight that I have, just to kind of round it out, is people will always pay for convenience. No matter how good technology gets, people like peace of mind and convenience, because you want to go and do other stuff. You want to be, anything that simplifies, and you'll pay a premium for that. Go look at MetaMask and how much money they're making, and Phantom. There's swap functionality right then and there. You, Robbie, know that that's not the cheapest, most effective way to trade on chain, but that doesn't matter for a vast majority of users that just want the convenience, right? That's why I think businesses like Robinhood provide a lot of convenience for users that are already doing a lot of other stuff on the platform. And so I think this is why it's a bit, I don't think it's consensus. My view has always been companies that have distribution, that have trust. Because you're touching money, you need to embed crypto in businesses that have already earned the trust of the consumer. And buying the trust and earning the trust requires many, many, many years and can be broken with a bad hardware update, a hack, a social engineering attack. And unfortunately, crypto has a lot of that. And so this is, again, what I was saying earlier. Crypto is working. It might not be working in the way that you want it to in the pure decentralization ethos and be your own custodian and own your own wallet. I think we're past that not everyone is prepared to be their own bank, and not everyone is prepared to be very sophisticated with their own OPSEC and security, and that's okay, and I think that is unfortunately required us many, many years and a lot of pain to come to that realization. But I think we're getting there.
Yeah. The only way out is through, and I think a lot of people are, like you said, facing that and coming to that realization. Santi, kind of a quick one today.
Yes.
Really appreciate you coming on and the investor update on Inversion, as well as just the broad strokes in the market and where we are today. As always, you rock. You're the man. Appreciate you coming on.
I love it. I love having these investor updates with you. We should do it more often. Thanks for having me on, and keep doing it. Crypto's not dead, but we have to go through to get out of it.
I love it. Yep, let's do it. We'll do it again real soon. Thanks again, Santiago.
Thanks, guys.
See you.
Bye.
All right, guys. Well, that was the grand finale. I don't know if you guys can tell, but it's been a doozy of a day. I mean, fantastic lineup across the board. Santiago wrapped us up. We had Jesse, we had Katherine, Kirkpatrick, we had Haseeb, we had Olivia. Man, I mean, just overall fantastic vibes. Santi's a man, as always. Glad that Good Idea Ventures, our portfolio company here at the Rollup, is invested. Bing, bang, boom. That's how you do it, guys. That has been the show for today. That's it. August 6th in the books. We didn't get a cloture vote It's looking unlikely that Clarity is going to go live, but you guys heard from all of our guests today about why it doesn't really matter and crypto's not dead, and how this thing is going to continue to chug along and progress further and further forward, even without the Clarity Act. No matter what happens this week, next year, the year after, we're going to continue and accelerate. It is inevitable, and this has been the Rollup, guys. Thanks so much for rocking with us. Give me some W's in the chat. Ricardo, you seem like a new viewer. We appreciate you. Greg, we appreciate you and your questions on tokenized equities today. Edward, as always, you're the man. Go lighter to the moon. New type trader, Denari sounds like intense for stocks. It kind of is. I mean, it is tokenization. It's bringing the stocks online. And so almost like it's like the ERC20 standard for equities on chain. And then you're going to get a ton of DeFi exchanges, AMMs, DEXs, bridges, lending markets that are all going to facilitate DeFi with these equities, asset classes, all kinds of stuff. I don't know about you guys, but I want to see a base token with a public company. Feels like Clarity would help that out. Guys, we appreciate you. We love you. And we're going to see you again tomorrow on The Rollup.